Audio.
Well, hello.
Just had to unplug it and plug it in again. You know how it goes sometimes. Welcome back to the show.
Ooh, double audio, double audio, double audio, double audio.
And a little bit echoey still. Just a second. Whoop, whoop, whoop. And maybe that's us back in business. Welcome to the show. Good to see you. Today's show is titled Even Surfers Get Waves. And it's true, the surfers, yo, dude, I'm just catching some waves or whatever. The stereotypical surfer doesn't get the get recognized as being somebody who really gets it, but they do, right? Because they're up there on their board and they have to know when the waves will break, and they understand the science behind it, whether they're able to actually put the math down on a piece of paper or not. That's something that we'll be talking about in today's show as we look at the technical analysis. And I'm trying to make it so that there is a concerted effort in today's live broadcast to help people who are unfamiliar with markets, new to trading, who basically the people who watch this show and think to themselves, I don't really understand 90% of what you're saying, bro. I'm making this show for you today. So be sure to get your chat comments in. Be sure to talk to me. Be sure to get to the point whereby if you think to yourself, normally I don't get 90% of what he's talking about. Let's make a show today where you get 90% of what I'm talking about. And let's do that together, and we'll just make it super accessible. So I'm hoping to see chat and stuff like that coming in so I can read it and make sure that you know what we're talking about. And I also have changed my setup slightly here. I was slightly delayed actually today getting these guys to start working. For some reason the alert stopped working. No big deal. We can cope. We can cope with it. And I just it was just a little bit of a delay. So thank you so much for waiting for that. I've also changed my setup slightly. So check out. I've got a couple of things. Well, I'll show you actually when we get round to that. But for people who are new, okay, what do we do here? We do this thing which, for the layperson, can look almost as magical as what it's like when you see that surfer sliding down through the wave and going through on the wave and going through the eye of the wave, and that magical perfect moment where you seem to be in complete synchronicity with the movements of something which is so much bigger and more colossal and powerful than yourself, yet you're able to slip through there and come out the other side feeling on top of the world. And that's what we do. Now, we recognize that from time to time to make sure that we don't suffer too much on that front, looking for those moments when we get to slide through that wave perfectly. And the way that we do it is that we understand, the components that play, the board underneath our feet, the swell and the movements in the water around us. And it's that sort of a thing. Now, we do this, and we are just common folk, humans, normal human people, just regular folk like me. And it can leave you feeling a little bit like, well, surely all the power and the knowledge, it resides elsewhere. The data resides elsewhere. There's bigger fish, bigger things out there, and sharks in the water below. It's too much for us to do. Well, actually, no, it's not. The the people up on Wall Street, Wall Street is cracked and torn. Okay, and the people that are on it, their lives are worn. And they don't know what they're doing. Whereas we do, and it's actually quite a special thing, and it's been so well documented over hundreds of years. It's become well known that occasionally you find people out there that really do know what's going on, and they become wildly successful. It seems almost like magic. Well, that's the 90% that you don't get, and that's what we're going to start giving you access to today. So we're going to help you put that rabbit in your hat so that you can pull it out later on to much applause. So we'll teach you the magic tricks. Yeah. That's the idea, really. Okay, so um, when we were young, the future was so bright. Whoa, the old neighborhood was so well alive. Whoa, and every kid on the whole damn street was going to make it big and not be beat. Whoa, now the neighborhood is cracked and torn. The kids are grown. Lives are worn. How does one little street swallow so many lives? Woo! LFG, let's go. Thanks for joining me. Ciao, YouTube. That's what we do over here. Well, actually, there's charts. I'm in the charts. This screen is hopefully a nicer layout than it was before. I'll have to get Corey's message off the screen there. Whoop, whoop. Get rid of that. Get rid of it. Why is it not getting rid of? Oh gosh. Let me just click one here. Is this broken? Oh, Silver Mamba. Then gone. Great. Hopefully, then gone. Right. Great. Perfect. So this is a chart. This is a chart. Things that we'll be doing in today's show include looking at these charts to come up with ways that we can try and make money. I think that's something that everybody gets. That's what this is all about. And so you're with me so far, I would hope. And what we do when we do this is we look at these things on the chart. So I'll just show you a couple of quick things real quick at what we look at, and I'll build up a bigger picture, etc. as we go through here, and you'll understand more and more and more and more and more as we go along. Yada yada yada. But what we do is we essentially look at these objects on the chart. Now, what are these objects? And I appreciate that it's not especially easy necessarily. I hope that helps. Hey, nice one, huh? That's a little bit different. So you've got these things on the chart, and you'll see that they are made up of a kind of rectangle with a stick going out of it. The stick can come out at the top, it can come out at the bottom, come out both. The rectangle can be really, really small and flat. There's an exact whoa. Okay, so the rectangle can be really small and flat. There's a few examples of that on there. The rectangle could be really big with no sticks either side of it. And that's an important component of what we do, is understanding what those things are. So this is happening. This is the prices of a stock are moving around as people buy and sell it, and it's represented visually. These things are used nowadays to make the process of technical analysis a heck of a lot easier than it was 100 years ago. However, this story that some people have managed to be successful at doing this magical thing over a long period of time, last couple hundred years, people have become very famous for this sort of thing. Uh, they're not superhumans or anything like that. They're just understanding something that other people aren't. And over the decades and decades and decades, understanding that information has become more and more and more accessible. Stephen Hawking is a world famous scientist, and the thing with Stephen Hawking is that when he was young, he was fully mobile and lived a relatively normal life compared to, to his peers. And when he went to, was it Cambridge or Oxford? He went to Cambridge, I think. Actually, he rode his bike to it, stuff like that, right? And then he was told that he had this condition and that he had a short period of time to live, and he was going to lose all control over his body to the point that he couldn't move around, he couldn't move his hands, he couldn't use a pen and paper to work out the maths that he was going to go on later to win Nobel prizes over because it was that good, that sort of a thing. That type of level that we're talking, right? So how could this guy who was bound in a wheelchair and unable to use any of the tools that we kind of need, like a calculator for crying out loud, do these complex do this complicated stuff and then go on to actually tell the world about it. Well, in his mind, he's able to see the mathematics in a way. He's able to see it. He's like that sort of a genius. Well, um, 150 years ago, people had to kind of operate on that Stephen Hawking level. So occasionally somebody who was a genius would come along, would see the number blocks moving around, and would form a visualization of that movement in their head, somewhat similar to a chart like this. And by in their head conceptualizing movements beyond certain price points, they were able to think about how the prices had moved into a new risk territory and how there's opportunity there and where support and resistance might be in their head before people had the ability to do this. Now, some people would and they would draw it out manually, but other people responding to the market at the time would use the tape and would just read the prices and do it in their head. This was in an era before computers. When the modern world was born and we actually got computers operating in the markets as well, it started off with the process of people using them to work out their own decisions. And then it even evolved to the point at which computers themselves began trading on the markets. And it evolved beyond that, even to the point where that you can have cryptocurrency markets that operate 24/7, who have price parity, as in cross in real time, based on arbitrage, which is when somebody buys it on one exchange and sells it in another to make a profit off of that difference in price, which levels the prices out across two different exchanges. That's what arbitrage is often, that's what that's called, that process of doing that's called arbitrage. And that's done these days by computers really, really quickly. And the way that they do a lot of this sort of stuff with high frequency trading and all these things boil back down to a lot of the principles, the same principles that have been derived from looking at technical analysis over the years. If you think about things like the American police car, and you think back to the Blues Brothers movies and what the police cars looked like then, and what the police cars looked like a street at the time then, and then you think back to things like the Demolition Man movie, you might have seen that, which was out in the 90s but set in the future, and how the police cars looked in that, and how the police cars look now that we're in the future. And then you think back to, you think about things like, say, self fulfilling prophecies as well. Art imitates life, life imitates art, and there's a circularity to everything where one piece of inspiration leads into reality, and reality leads into an inspiration elsewhere, and a resonance goes between those two things. So we know that it is inextricable whether you want to define the current movements in the market based on technical analysis, which was invented after the movements happened, and whether the movements happen in the first place due to those same technical reasons is a fait accompli at this stage, and there's no point in trying to split the hairs between it. Was it the Demolition Man movie, which more or less described the look of cop cars 20 or 30 years into the future, which laid out the designs for what the cop cars would look like? Did going up, watching that movie, become the same adults which designed and then used those cop cars? Or did the movie just at the time look at what was happening with the design of cop cars so well that it was able to predict how they would look in the future? And it was coincidental, and we were always going to get there. You may have never have seen that movie, but to me, that's a question which can never be answered, because art imitates life and life imitates art. Well, there are fundamental movements in markets, like the surfer that understands how the wave breaks, which allows you to understand the movements within markets. What do I mean about that idea of the surfer? There's a question out there, which there's not a question out there. There was in the past. Science has addressed this already. And it's to do quite simply with why do waves break? You'll have seen the surfer that slides through the eye of that wave, collecting perfect gains on a wonderful 5-to-1 trade. No, sorry, mixing analogies here. But you know what I'm talking about? That perfect moment where you've understood the movements and the breaking of the wave to the point where you can time it, even though you're up there experiencing it live yourself at the very top. And there actually is a way of understanding how waves work. This wave here actually has fluid dynamics here. So the breaking of the waves. There's a subdiscipline of physics that studies the science behind liquids and gases. Now, to make a long story short, the wave will break when it's something like 1/7 of the elevation of. Wait. Have I? I think maybe I did freeze. I don't know. I'm not 100% sure if I froze my screen there or not when I was doing that. Interesting. I'll have to watch this back after checking the chat in a second. There's a simple answer to this here. At what height do waves break at and such? And me hitting the back button here, you can see here for simple, waves begin to break. Waves begin to break when the ratio of the wave height wavelength exceeds 1/7. Do you think the surfer who is surfing along, about to ride down that slope, necessarily understands that mathematics or not? What would you say? They're not necessarily going to write that formula down. And you, my friends, are on the way to understanding that process as well. And that is what technical analysis allows you to do. And not only has technical analysis, in my opinion, really always allowed people to do this, and does currently and forever will on any chart in the world, any price chart in the world, let's say, which obviously conforms to supply and demand economics, etc., free markets, all the sort of basic rules that they always have done and always will do. This principle of technical analysis always worked. I've proved it many, many times. I use modern day technical analysis techniques to do so because they're more sophisticated than the ones which were developed at the time when that price action was happening. Nevertheless, the ones which were thought of at that time works on those markets and are the genesis of many of the modern ideas anyway. They're just expressed in a somewhat less sophisticated way, which is understandable because this is a very nebulous body of work conducted by disparate individuals who are free and just enacting on behalf of their own self-interest. And it hasn't necessarily become a science as yet. Although there are movements towards that, the scientists themselves are quite niche and focused on what they're doing. And not everybody is actually successful. In fact, more than 90% of people who get involved in this sort of thing are not. And that's because what you really need to find is a surfer who can do the math and can tell you about it and can do the surfing all at the same time. And those people are very, very, very few and far between. Ladies and gentlemen, I'm happy to tell you that you found one of them right here with me. So that's what we do here, and we'll try and get onto some analysis to show you how that would work in a basic level, etc. Really soon. I overshot by a few minutes here, and the markets have opened. So I'll explain a few things whenever we're going through this today. And we can see here on GME prices, we've actually opened up down a little bit at 179, having a test towards the downside. That's an unfortunate beginning to the day. I'll explain I'll explain things about this. I've been looking at the wrong camera the whole time. I'll explain things about this as we go through this and try and come back to keeping it so that you can understand if there's going to be a 10% section where maybe you don't fall once, then it could be over the next wee while as we discuss live price action ongoing right now on a fairly expert level for people who are expertly trading. But be aware that you're surrounded by experts in a community of experts and people who are on their way to becoming expert, who are proactively trading. A lot of the people who are expert who watch this channel don't actually necessarily even engage in the chat. There are several of them who I know of who are more or less lurkers, you could say. However, they trade off the back of big accounts using absolute expert and experienced analysis of their own, and they tune in here to be part of the rising tide along with everybody else. So just know that you're in there with everybody as we do all of this together. I'm a little bit chilly just wearing my t-shirt. That'll help. Right. So that's that. So just so you know, we'll go back over and we'll take a look at the charts in just a second. The markets have just opened up, and we'll try and establish how things are going so far at the opening range so far today, etc. We're at 177 on GME. It's not ideal, but it's where we are right now. We can look at where those waves could potentially break at. Dober Mamba, thanks so much. Emma, Ticker Bingo, PS, Timer Check. Great start for the stream, Rocky. Thanks so much. Timer check. Why? There is no timer. Oh, sorry about that. Ha. Bit of a horse bolted situation with that one. Don't know why the machine's not come on. Oh, I do actually, because I didn't hit the Lumia button. So I'll take a look at MMAT for you as well, Dobermamba. Thank you so much. Dobermamba is one of those people out there who is part of that rising tide. Be aware. So I received a message direct this morning from somebody who wanted to talk about things in a way that could be understood a bit more. And I totally think that's this in the past, and we'll do it again. And Dobermamba wasn't that person, but in the past they've spoken to me about that sort of a thing, and they're all part of that rising tide. And I hope that he inspires you as well. If you're not inspired by yourself yet, but believe me, you will be soon enough. I hope that you're inspiring yourself all the time as well. By the way, Dober. Good stuff. Oh, I need to write your name down and put it on Matt. If you don't know, by the way, I was doing a reference to The Kids Aren't All Right by The Offspring that started the show here today. So that's what that was. That's what that chat was. Oh, get off my screen. So yeah, negative. Get right off my screen, please. Right. So negative price action today so far at the start with GME. Let's see. This is the 3-minute time frame. That's a very small time frame, and what the significant point is here that we've broken up or down and below. Obviously, you can see that there was this double bottom type effort here. We wanted 180 to work for us. This little bit of what is kind of flux along the way, unfortunately, hasn't offered up, hasn't become support for us. In a lot of ways, people ask kind of what's going to be flux along the way, and I think we would have needed to have had to seen highs up here into that 198, 170 area for this to have necessarily have been harder, kind of, like more significant for us support wise. Bringing in a Fibonacci to kind of measure that out and sanitize what I'm saying here. Just going from the low that we had recently down at the 6th of October up to the high that we've had here for now. We've been operating underneath this 236. We talk about consolidating above the 236. Well, that's been happening with movements underneath 185. Every time it's gone underneath 185, we've said that 180 is the potential target, and we want to see it bouncing from there and back above 185 again because of where we've been recently, which is into the 190s. So otherwise, had we been up here in the 199 area and so on, what you'd see is that this previous area of inflection would be down at something like a 50% Fibonacci retracement or something along those lines, with a bit more kind of significance perhaps to it in the pull terms, in terms of that pullback, as opposed to necessarily just here in the 382. Now we did want to see a bounce at 382. That's typical in movements in the markets, and we had that previously. Let's not forget we actually had that, and that's what that was. So then relying on that weakness the second time around of asking wasn't necessarily the ideal scenario, and this is one of those scenarios where we see things kind of just slightly rolling over a little bit and coming back down. Where does it then therefore look like it wants to go to? And no real panic for us. It's just a shame in a sense for anybody who is really banking on an immediate move up from this area to have to be down here at the 175. 175, the best buy price of the day. I think it speaks for itself now that I've got the drawings on the chart a bit clearer for us, does it not? This is where the 618 golden pocket is. And of course, we know that we've got this upward sloping line of demand, a demand line, as you could say, and that we're looking to stay within this overall structure as it is, having had it once, twice, 3 times a lady. And we're back here, of course, for the 4th test of this one. So right now, okay. And of course, the plans for us at the meantime are to kind of, maybe if you were to be trading this, well, I guess people aren't, but this is where we come for education so often, because I know a massive proportion of the audience, including myself, are diamond hand in this thing. in a play against the lack of transparency in the DTCC. If you want to know more about that, then get involved in the chat. People will tell you there, or you can go to the Discord, etc. What that essentially boils down to, by the way, if you don't know already, is that as individual investors who all make up their own minds, they're able to do what they want to do. And this year, we've had a massive advert out to the entire nation by the by Congress, etc. So they themselves got interested in this stock called GameStop after somebody that they themselves had found out about called GameStop, and then they told all of us and told us, Congress told us that if we actually buy and hold this thing, that we can cause them to get together to discuss ways to make the markets more efficient, have better market structure and better transparency. That's what they told us. That's what this year has been all about. So there's been no some sort of collusion in the markets. There was a very brief period where the SEC identified and talked about these sorts of impacts in markets and said that really, it wasn't that massive a deal. That overall, while some shorts covered some of their positions, etc., at some times, that the massive movements in markets have really just been as investors investing, and the SEC is absolutely delighted with that. And SEC is being inspired to look even more closely at market structure off the back of it, and is entirely and absolutely behind everybody. So there's been this huge advert that's gone out, and it's kind of like the SEC is telling everybody, and the DTCC and everybody else is telling us that they want more transparency. That there's a lot of people within the government a lot of people within the financial industry that want it as well. And then there's some bad actors who have a disproportionate level of power, and that really, by buying low float stocks and holding on to them, you can actually cause the markets to look at themselves and think, and the market structures and the participants in markets to look at themselves. And that's what the DTCC has done. And that's the way that I think that we should all talk about it from now on. If anybody than those congressional meetings did, they're at this point, I think they're probably crazy. CV Payne, for example, talking about it and stuff like that. Tons of stuff. This is now part of the common zeitgeist, and there is no way to collude individually with people about something when, of course, it's a fait accompli, and people bought this thing in the past. Nevertheless, that's my little bit of chat done about this. And the reason I was doing that was because it's a nice time to do it. Why not do it in here when we're looking to try and find support? 175, best buy price of the day, all that good stuff. It's nice to be amongst a bunch of expert traders. Now, of course, as well, you'll have seen and felt and all the rest of it, the panic that came in here as the markets opened up a little bit down elsewhere. Seen the potential for it and how it didn't happen here. So one of the lessons, and while you might not be following along with all the technical stuff I was talking about a few minutes ago, you probably did follow along with that kind of little satirical, but also actually truthful, and more true than anything else anybody could say against us. So that's the real good laugh, that one, isn't it? That you can make jokes that are actually funny because they're true. That there has happened. You might have got that part, but if you didn't follow the technical stuff beforehand, don't worry about it. Don't worry about it, my lovely enchiladas, because what you are following along with here is this simple concepts of what it is to be amongst people who actually have that degree of emotional stability when markets are moving live. And that, in and of itself, my friends, is a priceless thing. To be able to sit here and have jokes with you on the 15-minute time frame as we look up there and talk about how we want to go up and fill that gap is fantastic. And that's because you're tuned in here to the only technical analysis show that can do stuff like this. That's right. Okay, so that's what you're here for, right? Nice one. Okay, I'm going to catch up with the chat for a couple of minutes here. Do you want to see how AMP is getting on actually before, like AMP, same deal, okay? Pushed a little bit lower, perhaps. Got a line down here from the past talking about this. We've obviously pushed a bit lower. This is this area of where we've come back down to is a much greater area of support than in here. Unfortunately, small head and shoulders. There was the target at 44, so we got that target after the fit head and shoulders in here. We've had a movement down the way. The movement from the highs there at 44 down to around about the neckline at around about 42, 41, whatever, bringing us down here now to sorry, the $4 range have gone down to 40, 44 to 40, and then 40 to 36, right? We've done that now. So ooh la la. Okay. And now I'm not saying that everything's amazingly rip-roaringly bullish at the start of the day. No, but this is the natural movements in the markets. And what did we talk about there? What did we talk about, and who do you want to be like? And we talked about how you need to understand these things in advance, which is what we talk about in great detail. And of course, then what it looks like and what it is like and what it feels like and why we do this is because of this experience right here. And you're getting that little by little, just little by little, as part of a common rising tide of people that you are a part of too. Okay? And whether you realize that now or you realize it in 3 months' time or 6 months' time or 12 months' time, you're going to lift somebody else out of that bucket of crabs. And I salute you for it. DeWack got halted. Ooh, DeWack got halted. That's interesting. Let's take a look at KHT. Lowell, DeWack. Wedge here. The pushing down sucks. All of this sucks. So this movement, which has been is actually, you know what? Annoyingly, in a way, we got to an hour time frame. You can see the outcome from this has pushed us into that kind of diamond type shape there. A wee bit frustrating. Anyway, the what we have at this end is a wedge. We've pushed down the way. This is bearishness. There's you know, this is just the market's pushing against us. Oh, we got earnings, do we? Oh, is this what's going on? Estimate minus 168 period. Wait, is this? Oh, this is coming up soon this week. Oh, this is in the run up to earnings. Oh, when they're going to be better. Oh, this is all right. I see. I get a bit of it. I get the context in the market right now on this one. By the way, it makes a bit more sense. I didn't really actually think about that until there now. I've removed the volume from the screen if anybody's interested, to just for the sake of today, for the volume and that sort of thing. I'm going to be checking out the messages that have been coming in here in a second as well, if I can. How did you make the GME price bounce off that line you drew? Are you a sorcerer, sir? Yeah, right. So this performance from this has been disappointing in a sense, right? Because you can point to this movement up that we had, and that there, and saying, look, there's a swell happening here where things could be pretty good. And unfortunately, then I suppose in a sense, we seem to have got some sort of coral reef as we've come up here, and the water's gone in there, and actually, due to the other element of waves, which is that the capacity of the wave height above the water can only be so high relative to the amount of depth as well below the surface of the water and the surface of the ground underneath. Obviously, you know, like that type of thing. So sometimes, from time to time, you know, you're doing the technicals, you're saying these things all line up, but there's always the risk that of course, you know, there's something else at play underneath and that. So let's have a quick look in here and see on the 1 hour time frame. I'm going to put back on my other indicators from before, from the ones that you're used to looking at, because I think we're doing enough conversation today that I don't need to kind of hide stuff off the screen. Like there's enough talk about this that there's no need to there's no need to hide the complicated stuff visually because we're actually addressing it at the minute. So little things to be aware of, that while we've had these downward movements, it's during a period of ever increasing, ever diminishing true range, right? So these movements that have happened towards the downside is always tinier and tinier and tinier and tinier because there's no conviction with this. It's just it's looking at probably for people to try and just sell into other accounts. Thanks so much, Eric. This is quality. Thanks so much for that, Eric. I'll try and get these messages up on screen and stuff as well for us. So here's a couple of them. There's this one from Eric just here. I've lurked way too long and rarely catch you live since my schedule lines up with Jamie's better. You deserve everything and more. Bing bong forever. Eric, that's so appreciated. Thank you so much, my friend. Ghost of Wolfie. Wolfie, my friend. How do you make the price of Jamie bounce off that line you drew? Are you a sorcerer, sir? If one paid attention, they might be able to learn similar magic and use it to gain financial independence. Thanks, pal. That's brilliant. Eric Sorensen as well. You became a member. Thank you so much, man. That's really appreciated. Thanks for that. And did I miss anything earlier on as well that needs to be mentioned? I think we're doing all right on that front. I'll keep the chat so you can see that I'm reading the chat up on the screen here for a wee minute or two. Just like don't so you can see that I'm reading the goddamn chat, right? What I was just talking about there now was these movements up the way. That's a lot of the time they come in at times when they're selling towards the downside or whatever. The true range, I've ruined it. Anyway, there's just the less range is smaller. Huh. Yeah. Laughter at Homer. That's always that laughter with Homer. I should say probably actually from Observe Thyself. Good. I like that. What the hell is CRTD? I don't know. That song's so hot right now. Ticker bingo, ticker bingo. Oh, it was of course the ticker bingo song. It is so hot right now. Wow, 162%. I wonder what that's about. Joe Maxwell, are you doing well on a trade or something? That's so awesome if you are. Let me just look back up the way. Space Monkey, you can adjust the vid settings. Go to 720p. Yeah, if it's outputting in a low level quality for anybody right now, just do it manually on YouTube. It does that sometimes. Why is the thing not lighting up the machine? Can we take a look at gold today? Yeah, we can take a look at gold today. That song's so hot right now. Yeah, we can take a look at gold today, matey. Of course we can. Yes, we can. Yes, we can. So anyway, look, I'm reading the chat right now. So why don't you let me know if you've been following along, why don't you let me know if you're new to trading, and you normally struggle. Why don't you let me know if there's been anything that's made any of this more accessible so far, or if it's just too much like Alan Watts or something, right? If you want me to be less philosophical about it and get down to really, really, really basic but pragmatic things, if that's what it is that you want to talk about instead, or if indeed that you have a question, then come along and ask a question, right? And we'll try and answer that as well. If it's honestly as well, don't be afraid to ask questions that you think maybe seem stupid, and maybe or as well ask somebody else that be brave and ask the question at the risk of people thinking that you're actually stupid when you're actually really smart and you're doing it on behalf of somebody else or whatever mechanism or route in your brain you need to go around to be able to actually ask a question to enhance the show for people who are new. If you're a part of if you want to do that, then do that. So we can get it, and hopefully somebody out there in the chat can maybe keep an eye out for any of these questions in case I miss them, because it's I want to get to the questions, right? Great, cool. Okay, so UBU Rocky says Cachito, thanks so much, pal. 220 says Duo Maxwell. Duo Maxwell having a good time out there. 213%. What's going on, Duo? You having a good time? I'm following and I am new. I normally struggle. I will rewatch this video. Brilliant. That's so great. Thanks, pal. Good to know. Trace one says thanks in there. I hope that's for somebody already up on my chain link. So thank you, Rocky Aircrop. This is so this is the value you don't get anywhere else. Brilliant. We got a couple of requests in there, so we'll just go on and take a look at those just now. So we got PLN, Brew Lee. Brew Lee, pal. Thanks so much. On the way to financial freedom. Hey, Rocky, can we take a look at gold today? Would value your insight. Also, I want to take this occasion to greet everybody from Discord and Twitter. Much love to you all. Thanks for being there for me and everybody else. Wow, brilliant. Yeah, me too. Thanks so much to everybody who follows me on Twitter and chats and stuff like that there. You make Twitter worthwhile going on to. And thanks so much to everybody for being part of the Discord and everybody else. And that's, in every way that you're involved in everything that we're doing here. Really, really, really fantastic. And big shout out to everybody who tunes in here and chats and gets a part of what's we're going on. All right. Yeah, surfers catch waves early in the morning. Another extra tip for everybody, I suppose, that comes from the surfer world. Good one. A lot of chat going around about the whack. I suppose, before we take a look at the other things, since there's all this chitter chatter about the whack, we should take a quick look at the whack. Oh, wow, it jumped a bunch. Great. So you can't say anything about this really, to be honest with you. It's the wackadoodles, the ding dang do. So brilliant, great, fantastic. Have fun with your dwacks out there, everybody. It would have been nice to have been in on the old Trump parade for this one. A nice 10x or 20x or maybe even on this one. Woo. Okay, so that's cool. That's fun. Right. Well done. Well done, everybody who caught that wave. I mean, Rocky, tell us, is it going to keep going? There's very little that you can do. There's very little that you can do about any of this sort of stuff. It's at the 1618 when it made this jump up to the 2618. So there was two targets that I would have given you. They've done that. Does it want to go up high? Where would I say that this could eventually turn around at? If this goes on a massive parabolic run and keeps continuing as it has been parabolically towards the upside, then I would be saying that it's extremely dangerous and greedy to go beyond $644. That's what I would look to, right? I know it's insane. Okay, could 5x from here up as high as $644 could happen. But what we obviously need to look out for are numerous other factors. Let me just show you. Like, I mean, there's going to be craziness here of unparalleled levels. The Bollinger Band at the very least here lines up with $80.33. Typical Fibonacci trading stuff would take you back down for a test. If we see that, if it gets downside price action taken out 118, then we're going to 100, then we're going down into towards 80 or 90 this hour. Next couple of hours, we could do the same sort of thing, but with this Bollinger Band rapidly catching up, and maybe only need to test something like 112 or something like that. So just depends on how this thing goes. But if it wants to keep going, it's there's no history here, and besides, it's owned by somebody who manipulates things. Ticker bingo. Any chance you could look at BBBY or MNMD? Oh fuck! Spilt my tea. Sorry. Also swore. Trying not to swear today. But you spill your tea, you gotta swear, right? Am I right? Hit like if you swear when you spill your tea. Right. So I'm going to need to start taking notes of this. We've got gold. That's for truly. We've got I don't want to miss the ones that came in earlier on when they get removed. How did the price jump from there? Right, that was that bit. Sorry for the delay. I'm just looking for the question. Gold, I got that one. Zella, the warrior stone case. Right, we'll take a look at that for Ash. And Surfing USD, we've got BBBYMNMD. Right. Cool. Okay. Sweet. But I'm also going to go back to making this super accessible. Right. Have to. It's the show for today. I'm not going to abandon ship just based off of a few donations. Sorry, chaps and chapettes that wanted that. If anybody did, we're going to just continue on with our mission here of today. So we're going to take a look at those stocks, but we're going to do it in a way that makes this accessible to people, and we're going to explain what we're doing along the way. Before I leave this page, I'm going to also make it accessible just there what I was doing, right? These are tips. You could just call them tips, simple tips, right? And you can integrate this with going off and researching how these things normally work. Now, I've got plenty detail about these things. I've got videos that last for half an hour explaining it in extreme detail and stuff like that. But just first off, and you don't need to understand this, but you can understand the general principles of what I'm talking about. And that's the key. So follow along with the general principles, while the specifics are less important than the general principles necessarily, right? This is a chart. On there, there's those candles, which are those rectangles with sticks coming out of them. They show you the price. It shows you a few different features about the price, which you can break down in a minute or two here. But we see that the prices have been moving towards the top side. All of my candles are white. Now, they can have these candles colored to show you whether or not the price action on that day or hour or period, whatever period you're looking at, this is the 1 hour chart. So all of these 1 hours have been positive, but you could have them colored red or green. And these could be green and then it would show, oh, all been positive. Or they could be red and be like, oh, red and green and, mixtures showing you which ones were positive and which ones were negative. For me, to make it more simple for you to understand, I've actually taken away the white, the colors. So don't be distracted by them not being there. Just know that when you're looking at somebody else's or your own chart, that if these are different colors, and there wouldn't be, these would all be green as it happens. But on a different thing, you'd have these here. You can see there's a slight change in the color of them that I've put on there. You can see I've just made a slight change in the color, just so you can see. So that one there is that color, and that one there is that color. So that's what, and they would show you if it's positive or negative price action. And the way that you would do stuff like that, I don't actually know if this is freezing my camera when I hit the zoom button or not. I hope it isn't, but it might be. The way that you could do stuff like that, the way that you can understand how that works is, let me just make it so you can understand how it works. This here, does that work? No, that's a square. Whoops. Yeah. Right. This here is the is the top end of a candle. This end is the lower end of a candle. This is a positive candle where the price is moved up. Down at this point is where the price is opened, and at this point here is where the price is closed in that period of time. This is the 1 hour chart, which means that in this period of time here on the 1 hour chart, the 1 hour, that each one of these candles is 1 hour. That's what each one of these is. And then this is the price. If it's a positive candle where the prices went up, I don't know if you can see that left arrow. If the prices went up, then this area here is the opening price, and this area here is the closing price. And then if the prices went up even higher, right, during the hour, but then at the end of the hour they sank back down to this period, then you'll have a wick on them. And if they went lower after they opened up at the start of the hour there, but they went lower and then back up again, then you'll have a wick down below. Okay? I hope you could see that. This is it's a bit new for me doing that sort of thing. So I hope that works for you. And that's what these candles are. And then back over on that other chart, so I could just finish off that point that I was trying to make. That the Bollinger Band here, it shows us, the Bollinger Band is what's known as like an indicator, and you can get signals off of it, you could say, that would tell you like whether you should go long or short. And one of the things about this is that typically this will trace along the Bollinger Band if it's extremely bullish like this, and you'll see that you tend to have touches, as you can see here, not quite there and not quite there, but then here on the Bollinger Band, and there's you could look at this and you could say, well, in this area just here, we didn't make it all the way back down to the Bollinger Band, and that's 95% of the time that's what actually happens. You do go back to it, and then the next one opened up and we didn't make it back to the Bollinger Band that time, and 95% of the time that's what does happen. It wasn't that much of a surprise to see that on the next candle in, that this wick that came down was actually lower than the previous wick. Not a surprise to see that little dynamic there, that during this particular hour of trading, that the people who bought the worst price during that hour of trading actually then went to sit there and watch in the next hour of trading, and even worse price coming in. Not much of a surprise, but that's not really what I was really bringing that up for at this point. I was just kind of saying that this line will continue to trace up the way. It will continue to trace up. So we'll have this line here will continue to trace up the way because this is up higher. And at some point, we probably will get some sort of touch of this line. Just depends on when it'll happen. Not much in terms of technical analysis, but it's talking about something which is so far outlandish. And I've already given like 3 or 4 ways of looking at things. And has my computer crashed? Has my computer crashed? No, it hasn't. Okay, so I don't know if that works or not because I can't tell when I zoom in on the screen if it works. In fact, can you tell me right now? Can you tell me right now if that works? So I can see it in the chit chat, please. So I could just know does that zoom in thing work, or is it just a big mess? Um, why are there so few people here? Oh, are there so few people? Oh well, whatever. Just what is what it is. I do what I do. People miss out or whatever. It's always good. Doesn't matter. Whatever. I'm seeing 120 people. Oh, there's tons of people here then. It's great. So that's great. That's great. Brady Pearl's here. Yay. Minner says, yes, it works. Yes, 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 it works. Oh, brilliant, brilliant. Great, 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 great. So that would be how you were looking. So anyway, as it stands, this thing is extremely positive, you know, like whatever. Right. But it's radical stuff, right? So anyway, we were asked to take a look at a few different things. And gold isn't like this. Gold is very different. So let's just jump on over to take a look at gold. Now, the way that I like to take a look at gold on the chart is I type in gold, GOLD. There are other ways that you can do this, but I think that this one's okay. This is done on a US dollars per ounce basis. And this is what people mean when they say the price of gold. Oh, good. It's $1,800. So that's nice. This is priced in dollars, right? So that's one of the things. So we're looking at the price of gold here. Now, gold, right? So if you're new to technical analysis and you're like, okay, so gold, right? Gold has been around for thousands of years. One of the oldest traded things in the world. It's still used as a form of money. And if money isn't trading for stuff, then I don't know what is. So gold. So does this sort of thing work on stuff that's been around for that long? And how does it work and whatever else? Well, actually, it does work. Actually, it does work. As you can see in the past, we were like, it would be lovely to buy this, as I stuck in a few hearts down at this price over here, you know. And then what did we see happen is that the prices did come down to that zone. So these sorts of things, it does work. Now that's the 1 hour time frame, 24-hour time frame for us. Just let me then over here, just beside me, just here. Let me just. It's hard to move myself out of the way. Just down there below me. Let me line up my finger. Just down here, there's a button which I like to push, and it's called the auto button. And I say I'll just hit the auto button to make things a bit clearer. And then after I push it, I tend to push it again or do something to get rid of it because it's done its job for me in that sense, right? So if you ever hear me say, "Oh, just push the blah, 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 blah," and you're like, "What's he saying? The oh button, the the ooh, what is that?" That's what that is. This is gold, okay? And gold has, over the long period of time since 2008 to where we are now, primarily gone overall in an upward trending direction in price, kind of. You could say, sort of, right? You could sort of say that. Or you can look at the prices, and we know that these things here, these candle things, we know that these candle things with their bodies and their wicks show us the prices, etc., on different periods. We know that this is the range high and low is between these 2 points. We know that the open and close high and low is between these 2 points, so on and so forth. And we can see all that information on the chart behind us. Now, it isn't so clear when I'm zoomed out like this where those wicks are, etc. And why am I comfortable with that? I should address that maybe right now. Well, I'm comfortable with that because I like to look between the extreme movements in price. And I actually use Fibonacci retracements a lot to understand price. Now, Fibonacci retracement tool, as I've got here, for example, and I can pop on between that high and that low. Let's chuck everything in the bin for the sake of this education thing today, actually. So I can pop on a Fibonacci retracement, and I can go from a low to a high. This is like taking out your measuring stick. So I have a measuring stick here, and I'm holding it up against the prices. So let me just move myself over so you can see. So I've taken this Fibonacci out here, right? And I'm doing this. This is what I'm doing, right? This is what I'm doing. I'm doing this. Oh, it's this long. Okay, it's this long. Let me just go back over to my corner. Right, it's this long. Now, I can say, looking at my thingy, that if it were to go down this much here, if we were to go down this much here of the thing, if we were to go down this much here, that's okay, that we can cope with it, right? But if it goes down any more than that, then it starts to look like there's a good chance that we'd be going towards the halfway point. Just there's a good chance. If you were to say, because we know that these things move in a concertina fashion. What's a concertina? Concertina is one of those oscillating music boxes. Okay, so you've seen the concertinas before, and we know that the price action of concertinas, it operates like this, not unlike this in any way at all. That this concertina here looks so similar to price action in lots of ways, and we know that when it goes in and out, that there's certain ways that it'll go to normally, right? Certain expanding and contracting areas it'll go to, and that we can measure them out, and we can say, well, these are the ones that are okay. So if you're that surfer on the surfboard and you're going along and you're like, is the wave breaking yet? You'll look and you'll see that the front edge of the water is always constantly falling off the front edge of the water, right? There's always to a certain extent, as you're going along with water, the movement of the water is like this. It's pushing along, and that front bit of water is of course subject to gravity. There's always some rolling over of the wave as it builds up. Always some of it is dropping down. Always, right? But if you're on that surfboard at the top and you're looking, well, is it going to break or whatever? Then you're looking to see, well, is that front bit going down a certain amount? Because if it goes down past a certain pass, it's cascading at that point. That's what the Fibonacci retracement tool is used for in so many ways, right? And in so many other ways. Like if I know that I've come up this high on this wave, I've been on this surfboard, and I'm on this surfboard here, right? And I know that this isn't actually necessarily how waves work. And I could do this analogy actually towards the downside would be better, probably than towards the top side. But you just bear with me here. And I'm going up here, and I want to be able to get the best pleasure out of this thing. So at what point am I going to turn my surfboard around to go down the way here? What point am I going to turn around at? What time am I going to change the position? I'm here and I'm looking up the way. At what point am I going to turn around and start trying to get the most fun out of this thing as possible and maximize it? How am I going to maximize that? Well, if you're on your surfboard up here, oops, that's not a very good surfer, is it? If you're on your surfboard up here, you're starting to get a feeling that like, hey, I might be about to get one of these things, which is why I've come out here in the first place. I look for these. This is the brilliant bit. It's not just being on the water. It's not just getting wet, and it's not just having a board beside me, and it's not like falling in the water. That's the thing. This is the ultimate goal. It's why we're here. And then so this is the ultimate goal. These sorts of things. It's why we're here. And we're looking at it and we're saying, am I ready to turn my board around just yet and start trying to go through this eye of this thing just here? And you get that idea when you get things like this happening. When we go beneath the 236, and what do we see? Well, we got a lovely ride down almost towards this area called the 618 Golden Pocket. Golden Pocket 618, you don't need to understand why. You can just know that this is one of the things that we do. And that's why I do these things. Now, when you draw this on yourself, you're going to have the tool's going to have all these different colors on here. It's going to look slightly different, but these principles are what I talk about. You over time become familiar with these things yourself. If I got in the car right now and drove around all day, every day, and told you all about how I was moving the steering wheel and put my feet on the pedals, etc., you'd still have to learn how to do it yourself. So I encourage you to look here and see this is the correct way to do it, and then to get into your own car, get up on your own surfboard and try it out, and try and use some of these techniques, so that whenever you're over here, there's a chance that you might actually get one of these events, because that's what we're all about. And you certainly will. Anyway, you can do the same thing towards the top side. Now, I've had other analogies in the past. My analogy for the top side one was actually recently was a skier who's looking for this upward movement to try and get so that they can get their so they can go into this mode with their ski poles, where their feet and their hands and everything are. Or is that how it works? But they're like this. They're like this off into the sky doing their ski jump. So I've done all these sorts of things in the past, obviously, but that's that one just there now, and this is Fibonacci. So what we're going to do just here right now is we're going to take a look over at the other side of the chart where the prices are actually happening right now, and make a similar sort of assessment off the back of things and say, well, how are we doing, and what's it look like, and where have we come from, etc. And one way that we can do that is we can do it across like a long period of time. So let's take it from the 2008 financial crisis up to the crash, then up to the highs that we were at just now, and say where would the 236 come in at? And this is one way that you can find like areas that might be important. So you can take out a horizontal line and just pop it on top there. There's that 236. That's the area that the surfer was like, oh, I'm going to change the direction that I'm pointing now to try and capture one of these things. Right? That's just one of those areas. Okay. And then another thing that you can do then is that you can measure it from the lows that it had recently in the last downward movement. Because really, when you're looking at this chart, and I said this kind of looks like it's been upwards. It was up over here, but that was a decade ago, and now it's up here. But it spent a whole decade not being up there. So I said this is overall trending towards the top side, and it kind of, it is. But we also have to be real about things. It was going down the way for a solid 5-6 years in the middle of that, and it's been going up the way for the last 5 or 6 years. So we know that from this point over here that there is also another major point in the market to measure from. So let's do that, and we can do that using the same tool in the same way and looking up, and we can say, well, over here there's another one of those lines. Right now, off the back of this, we can then say, well, maybe if we did go down past that, we'd aim to somewhere like here. And, maybe if we went down off the back of that, we'd aim to somewhere like here. And we also talked about other things before about where we could aim to and what might be pivot points in the market. And how pullbacks could happen. We did talk about that a little bit. Now, this is one of these moments when transformational learning takes place. It's right here. This is one of these moments, and you're about to have one. And people watching this show all the time get them all the time. But you say, I've not understood 90% of what you're talking about, and you've missed out on that experience. And you think, how do these guys understand? There's moments that happen when they get something, and I've not had that yet. Where is it? Well, here's one of them right now happening live. Let's be mindful as we look at this stuff together. Let's just be mindful right now that this is what's happening. I drew in 2 lines previously. So let's just quickly review. We have 2 white lines, this white line and this light line. And both of those white lines were 236 Fibonacci turnaround points, where we said on the Fib retrace, right? Fib retrace on log scale. Okay, that's just these are the technical things using log scale on Fib. Just if you wanted to recreate it at home, etc., that's the conditions that we're using to do this. Okay, and there's 2 significant ones, right? So this one here, should do that arrow the other way around, shouldn't I? This one here is the most recent one we drew in, and that is from the low 5 years ago till now. And then there's this one over here, which was the low from 2008 till now. And we also know from looking previously that if we do go past the 236 points, that there are targets to be had, right? Because I was doing the measuring tape, talking about how there's the 23, about how if you go past the 236, you might look to other targets, and that you could see pullbacks to certain areas, one of which being this 382. This happened earlier on the show. Now, this happened during a period of time when I was saying, I just want you to be here and be part of what we're talking about, as I was doing complicated technical analysis for something else. And it was on GME at the time. And what we were talking about on GME was how there'd been a pullback, and the prices had moved up, then there'd been a pullback to a certain area. They'd gone a little bit higher, but they hadn't quite gone high enough for this area here to have been of substantial enough support. And that area was a 382 Fibonacci retracement pullback. That's what that was. And then we came back down. It wasn't strong enough support, and we went down to find out the next area of support. What do we have then lining up perfectly is that the 236 points line up perfectly with the 2008 till now 236, right? Lines up with the 5 years ago till now 382 perfectly. Look, this is where the 382 is, right where that line is. So you know like in advance the way that this wave would be working. You know already how you would be able to position yourself in the markets just based off of having measured it like this. Oh, my bell's ringing. Back in a sec. It's the postman dude. So I'll be back in a second. I might have to sign for something or whatever. But I mean, I guess like you can tell me if that worked in terms of I mostly got the transformational moment type thing out there. Talk about the 382 and the 236 overlap and how that white line lines up perfectly with that next 382 and how that would therefore be like two areas of confluence and why you'd look for like a bounce there. If we went down to that 382, you would expect to see a bounce of some sort at that price point, and that would be a decent enough area for a risk management, decent trade. I'm not a financial advisor, none of this is financial advice, but you can see how these things work together and why we do what we do. And why there's so much layers of complexity, but you should have hopefully followed along. I'll be back in a sec. Awesome. Okay. I don't know. I mean, people might not necessarily have been even paying attention to that. That's fine. Uh, so I'll just bring up the chat again on a screen for a second. So I see. Rock Aircraft, would you mind explaining how to set up the fibs like yourself? It's too advanced for today's lesson, I understand. Oh, I can set up the fibs like that. Sure, no problem. I can show you that. That's a good idea and a good timing to do it. Good timing to do it. So I hope you didn't short to whack. No, you shouldn't be shorting to whack necessarily in that sense, right? Yesterday it went to 175, right? See, Rocky being president is the scariest thing I've ever heard. Woo, take that off the screen. Don't want to reduce my chances of president. Frog Lord, buddy. I was going to play some of your music today, but I didn't actually play it yet. Good to see you. People can check out Frog Lord's channel if they want to hear some music. Frog Lord, just check out Shake Your Booty. I miss seeing that kind of volatility in GME. Yeah, Trace one right. That is craziness. Why didn't see you like last week? Of course, we're paying attention. Of course, you're paying attention. Of course. And Bruley, amazing stuff. Thank you. Great stuff, says Christy Callahan. Cool, nice one. Nice one. So we want to take a quick look at how to set up your Fibonacci this way. Let me just take all this and chuck it in the bin. But do you see? And I'm going to chuck this in the bin. Right, it's gone. Okay, live with it. Now I'll just show you real quick again here how you would do this if you were doing it at home yourself. Right. So let me just get a Fibonacci up and reset the there's the defaults there. Oh, the rank. And so this is how it would look for you at home. You'd have your chart here, and it would have red and green candles on it, admittedly. Not these white candles. But it would look the same. And then what you do is you would take out a Fibonacci like this, and you could pop it on so from the low to the high up like this, for example, right? and you'd want to go from the extreme points. Now, when I use Fibonacci's, I almost exclusively go from wick to wick. It is a far more reliable way of doing it, although I will occasionally check with the body-to-body ones. It's kind of a nuanced thing. I don't want to get into the details of explaining why you might do that. It's actually kind of hard in a sense to explain why you might do it, because, you know, sometimes you do things just based off of experience. Gosh, getting this to line up is a bit of a hassle. So one other tip you can have here is you can hit the magnet tool to try and make things easier. It doesn't always make things as easy as you'd want. I go wick to wick. So we know what a body is. There's your candle. It's got a body on it. It's also got these sticks coming out of it. These sticks are known as wicks, because this is a candle, and that wick, you know, like you light the wick on a candle. And actually, when you make a candle, traditionally there's a wick coming out of either side as well, by the way, as it happens. So candles, okay, and this is and you go wick to wick. Why? Because that's the full range of the prices, but also because you wouldn't go on a Fibonacci thingy here from a wick to a body. You wouldn't go from a wick to a body. You don't mix them up. It's just that wouldn't make any sense, right? Because if you were measuring me and it was like you were like, oh, I'm going to measure your whole family, but I'm going to measure me with my shoes on and measure my brother with his shoes off. What's the point in that? You're not, you know. And then what? So anyway, so then you've got a Fibonacci retracement tool drawn on the charts. Now you'd always go from left to right. You always go from left you always go from left to right. Why? Because because the charts themselves, look at the charts. The charts move from left to right. You know, there's no way that the chart never suddenly starts going back the way. It doesn't happen. We're going left to right. Okay, so that's why. Now, the reason I'm telling you that is because that makes it easy to remember if you go from the low to the high. Because a lot of people will be like, I want to do a Fibonacci measurement here between this thing. And what they'll be tempted to do is to take out the Fibonacci tool and go from the low to the high, because they think, oh, you always go from low to high or something like that. No. You always go from left to right, which makes it an implicit answer in there from if you go from high to low. So here's a measurement. It's got a high and a low. Do I go from the high to the low? Answer, go from left to right. Well, on the left, that's where the high is. On the right, that's where the low is. So there's your answer. You always go from left to right. It doesn't matter. High to low, low to high. No, left to right. Easy peasy. That answers the high to low part for you. So you've got a few Fibonacci's on here, or you've got two Fibonacci's. Now, you want to have this set up in a way that makes it so it's more visible for you. Now, this might be more visible for you that way. For me, not so much. I like to get rid of the backgrounds, okay? And actually get rid of this other Fibonacci here, because that was just for example's sake, but it's not for the example that we're working on. So so I now have one like this. Now, I also find that I like to have the numbers to be a fairly, the lines to be a consistent color for the most part, just for the most part, so I can mark out significant areas. So what I would then do is just use one color and choose any color. Now, it doesn't really matter. Let's go for this bluish kind of color here. So it's a different color to what I had before. Doesn't really matter. Actually, we'll do what I had before and choose a red color. That's a bit much. Okay, this orangey color. Okay, nice one. We'll go with that. See, like I say, doesn't matter what the color is. But then what I like to do is, because I know that the 236 is important, I like to take the 236 and change it to a more visible color. Bing, that's handy for me. Now, you might not be able to. So what I'll do here is I'll just make the lines themselves a bit thicker using this one. And then, because I like to have the Fibonacci, when I've measured this area from the left to the right, and this is my measurements, I'm looking here at the subsequent price action. I'm asking myself, is this low lower than this line? Is this low lower than this area? Is this movement up the way, taking out this? You know, I'm asking myself these questions, but obviously they don't line up. It doesn't line up the way I want it to. So I'll make that work for me as well. And I'll make it so it extends the lines to the right. Ooh, nice one. Now, also kind of handy for me with my price chart, my prices on the right, to have the prices, the lines, the levels of this thing on the right as well. So I'll go down to labels here and I'll go right. So there we have the labels on the right-hand side. You know, I'll make this line a little bit thinner because it's just a bit too thick on my screen. It's a bit too much. Actually make it a little bit thinner again because I still think it's too much. Great. I like that better, right? Now, we also have the golden pocket. Now, the 618 area is is a very key area in Fibonacci. But what we like to do is, and for some reason, my chat thing, it's kind of annoying me with with the uh, with the with my messages being the highlighted messages thing in the background being up there constantly. It's whatever, but we'll remove. What doesn't matter. Doesn't matter. Right. Sorry to distract everybody. Right. So yeah, we've got the 618. It's very important part in the prices. Right. Why? You can look into that anytime you like. Loads of reasons for it, like golden ratios and wonderful stuff to do with like how amazing this number is. Like, have you ever noticed this? Have you ever noticed that? This sort of thing. Big time stuff. For example, take the SEC report that came out just on the 18th of October there with regards to the extreme volatility and the market structure in the options and equities markets in January 2021 in the United States. The SEC released a report and talked about various numbers at which the prices had various numbers at which the volume and the amount of buying and selling changed in the document, and it said that the amount of buys and sells, etc., had changed by, and lo and behold, it had gone up by 68% one time. This is a bit more than 618, I admit, a little bit further. And then it dropped back down. And where did it go to? Well, it went down to 38.2%, exactly onto that Fibonacci number. And then and then as well there was something, I think there was something in there about 23.6 or 23.4% or something like that at one point. Something number went to so close to these Fibonacci numbers. That was just from a report that, and they had no clue that they were talking about it. So you can see it there. You can see it on the price charts all the time. You can see it in the shape of your ear on the snail. You can see these things everywhere, right? So there's these important numbers that exist in nature to do with loads of stuff, right? Loads of stuff. Okay. So you've got like our imposition onto the world is like 50%, 30%, 25%, these hard, clean edges. You know, we like our buildings to have nice edges. And nature itself is more like, is actually more like 23 point, you know, whatever, 23.6%, 38.2%, 61.8%, etc. You know, there isn't really a hard half in nature. It's actually more like these sorts of things that happen. And actually, it's more like that happens on world of charts as well. So there's that. Now, I like to make the golden pocket, which is a movement beyond the 618, which I'll make green now, into the to this 0.65. So you get that little kind of pocket, a little range there, because the prices come down and then they kind of push a little bit more just there, just like in that SEC report where it went to 68. Now you could set your golden pocket that way if you like, and I'm going to borrow one of these other numbers from the Fibonacci sequence to use that to use that box here in this 5 would be what I like. Now, shout out to Peter Hewer, one of the longest running outcropticians, who found the channel back on about January the 8th or January the 5th, 2020. He likes to use 6.6. Now, that document that came out from the SEC was 6.8, right? Okay. But, and they didn't know that that's what they were talking about. I use 6.5. Now, that's your choice. Okay. You can do what you like. I've added it on there, and I'm also making it green. Boom. So now we've got that laid out. What I then went on to do was I took a horizontal line from the left and I popped it on top of that 236. I then went over to the right and I found the low that was the basin of the price over the 5-year period to find the next most significant low. Actually, very easy to find it. You know, you can look and you can see this is your last low. Where was the last most significant one? Well, this is the lowest price it had been, you know, in that whole period was this that was there. So it's quite easy. It jumps out at you visually. Like I said, to go back to the earlier points in the show, Stephen Hawking doing his math in his head, or Jesse Livermore just reading off the tape, he'd have known this in his head. He'd have like thought it and he'd written it in pieces of paper as well, and like thought it was like, what is this? How is this working? How is this working? Oh, look at this stuff. Oh, I can see it went down to here, and I can see that when it went down to here, it did X, Y, and Z, move back up, yada yada. Incidentally, how does this look on the thingy chart? Right. Anyway, now over. So then you can do this, and you can draw on another Fibonacci retracement from down here. Well, you could if you'd lined it up properly. I didn't line it up properly. From down there to the highs, you've got your 236 and the 382, and oh, it doesn't actually line up perfectly at the minute on this one, does it? The 382, the 236. Right. Right. So did I line that up properly? Did I do this wrongly? Did I do it first time from the all-time highs area? And the I don't know. I'm a wee bit confused myself in terms of how I've lined this up because I thought I had the 382s. I was going to go back, going to hit undo enough times to get the drawings back up so I can see if they actually did line up properly or not. But anyway, that sort of confluence thing is real. So if I just go back again, I can audit myself. I do like to put out good quality information and not say anything wrong. So I run out of undos. No, still got some undos left on my chain. Come on, hopefully I got enough. I've run out of undos, haven't I? Yep. Where did that line up with? Did I do it down here or what? Did I take it from this point? I thought I had. Doesn't really matter. 236. Well, it's at 1634 and the line's up at 1590. So anyway, you've got this. It's $40 away, and you're talking about something moving $300 and stuff to get there. So it's like the confluence is there. It's kind of wait undo. Yeah, I don't know though. I honestly don't know where if I did that wrong. Doesn't matter. It really doesn't matter. Anyway, gold, right? So just cracking on here. So we already know about all of that. Now, what's the pertinent parts of information for us for where we are now with regards to gold? And from that high to this low, damn it, I've got back to the crap Fibonacci. Well, I'll just use the crap one for now. We're above the 236. Staying above this 236 is lines up with that other 236. Good degree of confluence right here. So hopefully you're experiencing some sort of sense of understanding things coming together. We're measuring this area and we're looking at it and saying where have we come down to, or like where do we need to stay above? Now this tool, the Fibonacci retracement tool, like if another way of talking about that surfer who's going to turn around here, his surfer that was on top here, and he's thinking, do I turn my surfing board around? He's waiting to take out the 236 as we saw on at this point over here to then move down the way. That's just how the surfer's thinking. So what's inside the surfer's mind is that the 236 validates the fib. Rad. Yeah. Radical. Way, that's rad. That's bodacious. Bodacious. Right, anyway, whatever. Bodacious, right? So the surfer's thinking, the 236 validates the fib, okay? That's the analogy that we've got here. That's why I'm saying it. Before then, you've got an invalid Fibonacci retracement. When you're below the 236, you've got a valid Fibonacci retracement, an invalid one. This particular one, unlike the previous two, is looking from a high to a low, still going from left to right, but it's looking from the high to the low. And we're measuring here and saying the 236 is just here. So we've come down the way. So in this scenario, our surfer is here, and I just have to draw him upside down. Okay. So their surfer's like here, and I'll just show you by flipping the charts. Here he is. That's the surfer. And I'll just give you a look at an upside down surfer. That's what an upside down surfer looks like, having come down, looking to go above the 236. Well, I'll just flip the charts back over again. That's that surfer. You get it. Over here, that's that surfer. He's upside down, right? But he's looking at this the same way. It's just that his world operates that way around, and he's looking to go past 236, and then he'd be aiming in here for something like the 1929. So 1929 is a good one. So we'll be looking for those halcyon days, 3-4 years before the start of the Second World War. That's what we're looking for back there, the swinging 20s. Okay, and there with this one in that 618 would be if we continue up the way here. I don't want to do any more analysis on this now. You'd be thinking to yourself, but we might want more. We might want to look at things like these oscillators down below to understand, to get a better idea, a better handle on whether or not right here, right now, as we're just above gold, that this is enough. We might also want to look in here, and this is the 24-hour time frame, on something like the 1-hour time frame, and kind of question as to whether or not right now we're trying to break out from what was previously a wedge beforehand. So you'd be using all sorts of different techniques like technical like pattern analysis and stuff like that or whatever. or you might be using harmonics and the like. I mean, is this a harmonic that's in here? Would that be one? Doesn't look great necessarily. So go up to the 4 hour time frame and see. So you might be looking at this thing. Or really, you could just broadly speaking just be looking at this. I'm obviously cutting through a lot of lines over here. I don't really care, just to make the point that this has kind of been is consolidation since this point here, and that the main point being here, so long as we don't take out this area, then we're doing all right. This is obviously below that 236. We'd obviously be heading down there if we did. In terms of that analysis. But yeah, anyway, no, I should really move on. There's plenty of stuff that I've done recently. There was a big fib channel I had drawn on the charts as well from over here. Fib channel, another thing that was pretty decent for quite a while. Where's the fib channel? It's not that one. It's the parallel regression channel. Is a regression trend? Yeah, is that what it calls it? Can't remember. No, this is no, that's just a different channel. No, it's not. It's the fib channel. Where the fuck is the fib channel? So swore for the second time. This time I did it myself. Damn it. There's fib channel. All right. Yeah. Woof. And yeah, anyway, look, we're above the 236 on this one. But we're not above our market structure high. And to get above our market structure high, we need to take out that 618. You can see just looking at this here, that this area here, if you were looking at this and you were kind of thinking about it from just a human being as a pattern recognition, that if we took out that area, it would be kind of changing the effect of this channel. It'd be changing the effect of this channel if we took out that area right there. We took it out. So then if I just go back up to the 24-hour time frame, and so I can get a better handle of it, yeah, that area, that's that 618. That area, that's that 1929. So why would you take profit at 1929? Why would you take money off the table at 1929? Why? Well, for all those reasons, right? Because the more like eyeballs that there are on this area looking at it saying what's going on over here, the more people will be taking profits and stuff like that. So like all these sorts of reasons, you can come up with any narrative that you like to explore that. Hopefully you're still following along, right? Hopefully everybody's following along. Hopefully everybody is following along. If anybody isn't following along, please take a moment just now to tell me. I'm going to try and get as much done here today as I can. I was just trying to get rid of some of that junk off the charts. I actually don't know why I did that, so I'll just try and stick it back on now, actually, instead, in case we come back to this lesson in the future at some point and we want to revisit it. But hopefully there's something to be taken away from that, right? Hopefully there's something there, and that you've understood it. Does anyone else have any clip suggestions from today's show? Says Apple. Thanks so much for that. Rocky Aircrop, I've had those questions for sign up fibs for a while, so I really appreciate today's episode. Thank you. Brilliant. That's fantastic. That's great. Salamander, I'll find the time after the show ends to learn how to make clips. Okay. Oh, Apple Blossom, that's so awesome that you're doing that. Thanks so much. Look at that chat that's going on. Apple Blossom, the clip making option isn't on today. That only makes only makes 1 minute clips. Yes, those clip making options isn't on today. Damn it. Forgot. That's because this thing here that gets this chat message up on screen. I need to set up a streams elsewhere to do that, and they don't set the settings on it right, and it's frustrating. So it's one of these little. It's just more workflow to get this nicer stream. The main thing for us, by the way, in this, if you didn't notice, is to stay above 1770. Right? I don't know if I actually said that throughout this entire process, but obviously stay above 1770. Otherwise, there's a potential move on down to 16. Right. Anyway, so thanks so much. Thanks so much for chatting about that sort of stuff. Yes, it's because it's because it's set to entertainment instead of gaming. It's what it needs to be set to for the clip thing. But those clips are just one thing. Because 1921 was the greatest stock market crash. Maybe that's it. Maybe that's it. Those halcyon days. Am I right? Just before we needed to go to war to kind of feel better about the whole crash thing, or something like that. I don't know. Something like that. There was reasons from books. So the questions, right? So I think we're doing okay. I think everybody's saying, "Oh, Rocky Aircraft, this is an amazing stream today," says Corey. Great stuff, says Brew. Brilliant. Oh, that was so helpful. Fantastic. Great. Seems everybody's doing all right. Fantastic. Cheers, everybody. By the way, that's why we all tune in for Fantastic. Right, back to this thing. Okay, so yeah, we can move on then. We had Zella for Ash, Lee, XELA. Let's do this and let's try and make it accessible as well. Big pullbacks here so far in this movement, which is potentially turning things around, right? So what we've learned about so far is that we've got a dude, and there's a couple of different dudes. We've got a dude which is on a surfboard, and he has waves and stuff like that. And then we've got a dude which is on. Oh, I can't draw the dude over there. We've got a dude which is on skis. Okay, and he's on something like that at the time. So there's different dudes around, different dudes doing different sporting activities, all mostly extreme sports because this is a dangerous game. Trading, always be aware, and that. So what type of dudes are playing their sports over here? We also know that we've got another dude that we talk about all the time who is on a diving board, right? So we've got a diving board dude. We'll call him A. We've got surfer dude. We'll call surfer dude B. And then you've got and I'm aware that I've written this in a sort of and not everybody's brain works the same way, right? And the orders of information don't necessarily matter. We've got skier dude, and we'll call him C. Right now, I can't realistically do this. If I'm going to make things easy with analogies like this, then I need to really get it lined up properly. You've got A, diving board dude. You got B, skier dude. I hope that you can see that that's a skier. And then you've got C. What was the other guy again? Surfing dude. Right, so that's a bit more obvious as a surfboard, right? So, and that's C. So where do our fellas line up on this chart, right? Where do our fellas line up? And not everybody who's watching along necessarily remember what diving board dude is, but you probably should. Diving board dude pertains to when there's been a movement down in price and then a big movement back up the way, and what areas that you would look to for to see if things have recovered, because this is known as a V-shaped recovery, and that this area just here is the 886 Fibonacci, and that this area just here is the 100%, and that until such times in this area here you've got this danger zone, etc., and you've got a dude who jumped off, and then at this point here, what he becomes is a dude that's swimming underwater. We've talked through this a whole bunch of times, and we know that there's an A right in here, right? So A was in here. That's A. Well done. You've got A. We also know that there was skiing guy as well. So skiing guy, he could be on this part of the slope, for example. So you could put on skiing guy over here, I suppose. That could be B. And then you've got turnaround guy. Well, you know, there's this interesting kind of bit here where we see this massive movement back up the way. And if I just pop on a Fibonacci so you can actually see for the purposes of measuring this out, going from its all-time highs down to the all-time lows. That the 236 on this is a log scale as well. Is this set to log? Is this? Oh gosh, damn it! Right, seeing that last section when I was like, oh, I don't know why the fibs aren't lining up properly, is because I forgot that I'd done this. Right, I changed the things from this button here changes your fibs. Okay, it changes it. So you can see that in the background. It's changing the layout. That's why they didn't line up. That's why I got confused. It's very difficult to do what I do. I might be quite good at it, but there's a lot of spinning plates at any time. Okay, so that's why they didn't line up. So if you wanted to do this at home, the thing that I was missing from that bit, if you were to make a clip, I guess you'd have to include this weird moment of realization in it, is that if you were trying to line that up and make it look like the way I did at home, you'd have to have this button hit. Because when you're on the log scale, as I am, because I use the log scale, you can see that's the button for it right there. Then what you want to be doing is using this button right here to make sure that your fibs, which are these things right here, have the correct alignment. Because as you can see, when I take it off, if I take off that button here, you can see this changed a lot. And that from this area at the bottom to this area at the top, that whole thing is the 236, and it's huge. It's huge, that 236. Pop it onto the fib log, the logarithmic one, and you can see the 236 area is a much smaller. And why is that? Well, that's because the percentage difference here between movements down here and the percentage difference in prices here is much more similar, while the absolute value is very different. So I can show you there in terms of like, we're looking at a thing that started off at highs up there at 39, went down to 24 cents. And then until you get back up to 82 cents again, you've not done enough linear, or more than 82 cents, until you get back up above, sorry, until you've gone back up above $9 again. You've not done enough linear absolute movement in price to have gone back up more than 25% of what you've dropped back down again, right? So from $40 down to nearly zero, you need the prices to go back up nearly 10 to go back up a quarter-ish of those prices. You see, that's quite simple maths, right? 40 to zero, what's a quarter of that? 10. Where's the 236? That's nearly a quarter. And that's in at 9 something, that's nearly a quarter, right? That's why you need that. Whereas on a logarithmic scale, where the difference in the prices here, as I'm grabbing that chunk there, is the same as the differences would be over there, wherever on here, then you see the prices were going from 25 cents up to 84 cents, which of course is what a 3x movement in price is the equivalent of them going up, is the same. It's like 85 cents then up to 150, 160. That's only two. That's only two. You see, so this chunk here is, so you see this, this here, this 236 is a big chunk, and it's a little bit bigger than that one. That's because this is talking about tripling it almost, or 2.5s in it. This is just talking about 2 in it, and that's this. And this is the way that you do things. This is the way that works. This is the way that works way better most of the time. Now, there are people out there who look for certain things, like harmonics, for instance, and they'll use them and they'll base all of their stuff on the linear scale instead of the logarithmic scale. So obviously, over the whole of time, you're going to be looking at this, and if you're talking about this as being some sort of harmonic, where you started off your harmonic up there, and then you took it down to the lows over here, here, and you're looking for it to rise up and then go up and down and whatever else, you don't have a harmonic pattern on this. There just aren't any until you've got up, like really, not realistically, until you've got up to these areas again, for example. Whereas if you were thinking about it along these sorts of scales, then you could have a harmonic across this thing. And why wouldn't there be a harmonic across the entire lifetime of something? Because everything chunks out up and down the way. So there's something to be asked there about that, but that's a conversation for a different day. And of course, you don't need to understand that in terms of the 90%. You can assign that to the 10% that you don't get today, because it really doesn't matter. It's just an esoteric conversation I'm having with regards to the thing I'm trying to help you understand. And hopefully by having that conversation, I've helped you understand about the differences between the logarithmic and the linear or the arithmetic or whatever scale on the fibs on your charts, and also pointed out the fact that you need to have them. You want to be having them if you're using log scale charts, log scale fibs, linear scale charts, linear scale fibs, or at the very least understand what it is that you're looking at, right? Because you want to be able to be on if you want to be able to be on this chart and use the linear scale fib, knowing that what you're looking at is a fib which actually is based off of this chart, which is the linear chart. So there's your linear chart, and you can see that these big movements, now you can see these massive amounts of volatility that have taken up towards these areas has been sunk back down again, and it will be until such times as you're above $9. Now, this chart here is a total nightmare of a mess for charting on in terms of like down here, where people think that they're supposed to think in arithmetic terms. So in the chart here, which is a load of shit down here, people do things and say, oh yeah, just buy it. It doesn't matter about the price. And then of course, you're seeing your account as you put $10,000 into something sink down to $1,000. And you're thinking, how come I've lost so much money with this thing? And they were saying it doesn't really matter and blah, blah, blah. And this is nothing. And then you have conversations like the prices down here don't matter. Anything underneath whatever is nothing because we're going to these areas and stuff like that. And you can see that there's a massive, massive, massive shortcoming in thinking along those lines whenever you pop it back onto the scales that matter and think about that, if you took something like $10,000 and invested it here at that price, then by the time that it had gone up to this price, you'd have $20,000 to $30,000, and then you'd have up here you'd have $100,000, right? That's where you'd have there. And on the linear scale, you're going to have people talking about this thing as if that ain't, as if you know, this is as if this is like, you know, nothing. This is not. Look at the movements down there. It's nothing. Those movements are nothing. Look at these movements. Those are the movements. So do you see the inherent conflict and why the education that's out there primarily is by people who don't really get that dynamic. Now, I don't expect you to fully get the dynamic, but I think that you should be really opening your eyes up here. This should be. It should be, if you're not new to technical, if you're new enough to technical analysis that you've not gone through this before, this should be massively eye-opening, like transformational, changes everything that you look at on the charts, changes you'll never look at them the same way again. If it isn't, look, I want it to be, and I'm trying to make this for you, right? Not for me. I'm not paying attention to any super chats that are coming in to any massive extent. I don't think there's not been any. I'm not doing it for money. I'm not saying every 2 minutes, join the Discord and join Patreon or any of that. I'm doing this purely to help somebody who got in touch with me directly, who I think is representative of a massive group of people who would like to know more about what we're doing. That's all I'm doing is trying to help. So if it's not helping, I need to know, because I'm getting nothing. I'm not doing this for any other reason than to help. So let me know, right? Because I'm wanting it to be transformational. If it isn't, I can make it fucking transformational. I can do it. Like, I can swear to God, like, it can happen. It will happen. Anyway, that's that. This is Zella. Let's move on. There was those ABCs with the clips with the different dudes, the bits with the different dudes at different parts of the chart and where they are up to now. I'm going to pop it back onto logarithmic. I'm going to acknowledge the V-shaped recovery, which is obvious and visible here at this low. I'm going to acknowledge the retracement back down, which did give a retest of that 886 Fibonacci area. I could draw it on if I wanted to, but I don't need to, because I literally that says it there. And I am wanting to draw on Fibonacci's, and the ones that I actually want to draw on are to do with like movements around about the way here, because there could be, of course, the question, obviously, for on the lips, then therefore, of somebody in this moment. What Ashley maybe wants to know is Surfer Dude, is Guy C lining up over here, right? That's the question. Okay, it's going to be one of the questions probably. Is there a dude over here on a surfboard at this point? Is there one or not? Like, you know, chucking everything into the bin just so I can get this clean again, and popping this in down here up to, oh man, I hate these looking things. So you can see why I changed my design of these things. So do I not have, I'm such a fool for not saving my template as well before I did all this, but it doesn't really matter. So dead easy. I like also to have white Fibonacci's. I don't care about things. I'm actually, you know, the colors and stuff like that is all great if you want to kind of show off and everything, but I actually don't, you really don't need any of them anyway, so I'll just stick in the things the way that I'm happy having them. 0.65, 0.65, give us a blue as well on that, and a blue on that one, doesn't matter if it's not the same blue, and this is our movement. This is our movements that we had towards the top side. And every single time we've come up towards one of these highs, what's happened is there's been a dude going, fuck yes, every single time. And you'll notice this, right? You'll notice it every single time as we do this, taking it from that high to this high where we came up to, up to this high, up to this high, up to this high. Now, here it didn't. Here it did. Went back down again. No problem. Here it did. Went back down again. No problem. Where did it go to? Came right in. Where at? The 618 golden pocket. So you see how we take a simple measuring device and apply it to the charts and understand the implications for them and why we're doing it on logarithmic, why we're doing it on with logarithmic scale on the thing, and what the dynamics would be at certain areas. Then you stand to make substantial amounts of money. You also stand to be able to look like you're doing magic predicting the future. And this, my friends, is putting that white rabbit inside the top hat so that later on you can pull it out. And from that point there, the fact the when it went down to to this area just here underneath where I drew that arrow is of no surprise to anybody. So these then laterally, these extreme movements, and that is, they've seen us coming up here for highs, pushing down. Where did it come to the 618 and beyond a little bit? Is this actually even on logarithmic? It's not. It's not. It's not. It's not. It's not. But you can see. I mean, the same principles. I wanted to make sure. Here it is, and let's just keep doing it then and start again in that sense. Here's the first time round. It didn't take it out. Here's the next time round. It did. Went to the 382. I've talked to so many. I've talked so often about this, but you'll see that the 618 here is what I was aiming for. That and when I was putting that on the first time and how we came back down to it. But that I always say that the movements to 382 are completely typical within normal markets, and that's just part of a normal thing. And that you can also see that in a movement, then quite often the 618 is the 382 as a distinction between the logarithmic and linear. So within that slight nuance of me doing this thing here, there was a lesson to be had, and I'm glad that I kind of picked that up as I was going along. So you can see up here towards the 236, down there towards that, up here to the next level, 236 came down. Where did we test off of the 382? Up here towards the let's make this line up properly again. Up here towards the next high with our surfer dude came down 236. There's the 382. There's the 50%. Pushed on past the 50%. You can see that it came all the way down to the 236 and just pushed on down. At these points here, you've got things like market structure, looking at previous highs. You're able to come in and say, well, there's actually a bigger, broader movements, because we know that markets do things like where they go, where they got corrections at times, and it's going to be about where they go to. So we've got these bigger, more extreme movements coming in, getting around to eventually making a point here. This is the high. When you're doing Fibonacci retracement stuff, you have to go from the low to the high. You don't go from the low to some other arbitrary point on the chart unless it was the high. When I was building up here in this section, I was dragging the Fibonacci tool over. What you'll notice I was doing is I was going two peaks. So between this section here, where I started the Fibonacci tool here and where I finished it in this section just here, there are no peaks that are higher than where I drew it to, because I go from extreme to extreme. Up here, what happened in this area, there's no peaks that take that out. In this area, there's no peaks that take that out. Over here, I'm not measuring this. I'm not measuring this. I'm not measuring this like this. That's not how you measure that. This isn't how you measure it. This isn't how you measure it. This isn't how you measure it. That's how you measure it. When you've measured it, you've measured it. Here, this is how you measure this one. You don't measure to here from here, because this is in between. On up, this is where you measure to. You can't go from this low to that high. That's that one. It's drawn in. Now we have it. We can also then just extend the lines to the right, and we know where we are. Looking at this one, this is the next movement down the way, and this is another movement down. In fact, let's just do the same exploration here. Left to right. Here's a movement from a high to a low. This is the high to the low. In fact, I'll delete that previous Fibonacci, so that you can't. I'll delete the one that I just drew in overall. In fact, I'll take key areas off of it. Take key areas off of it, because this is how you do things. So here we have thing. By the way, for everybody to know, from next week on, I'm doing no more education on the channel, essentially, almost, right. And the reason for that is because this thing here that I'm doing now is typical. And I've got 2,000. I've got over 570 live videos I've done. Right. I've been doing this I've done this live on channel for, take that, on average over an hour, maybe 3 hours on average. I've done this for a couple of thousand hours live. Right. And within that, there's been maybe an hour's worth of live clips taken from it, or 2 hours, or 10 hours. Let's even say there was 100 hours, which there nowhere near is, of clips taken from that. I need to stop doing this in a way that, well, obviously my personal philosophy is to help the person in front of me, and I do it, and I think that it works, and I believe in it, and I believe in myself. I'm going to not do any more education like this on the channel for at least the next week after today, which is why I'm doing this in such an extreme way today, just so that people know, because this type of thing, as Apple was talking earlier on, be made into a clip or whatever, this information here is typical on my show. I've done it. I've done what I'm doing now at least 100 different times in the last 2 years. At least maybe not to this detail, to this extent, but at least. And so I'm not going to do any more, because all it does is it further and further and further removes us from when there was the education to then go back, and it makes it harder and harder to make those clips, and that value becomes even harder to access because of the volume around it. So, I mean, for instance, last month I did the best explanation of the RSI ever that's ever been done by anybody that exists in any textbook or any video anywhere on the entire internet, and I appealed to the audience to make it into a clip across 3 different days, on a Friday, the weekend, and the Monday, I think, or the Thursday, the Friday, then Saturday, or whatever it was. And it didn't happen. It couldn't happen, and I needed to do it myself. I didn't have the time, so I'm going to take less time doing this sort of thing in the future to go back and take those clips out, and that's what I'm going to do. Now, my time is extremely valuable, and that's not really worth my time, to be perfectly frank and honest about it. But I'm going to do it because nobody else is, and I think that that information is worth preserving. Right. So, and thanks so much to anybody who's trying to get in touch with me ever or anything like that. See, the stream's still working. I think it's still working as much as I think it can. Right. Great. So here so this is so we've gone up here and we've measured from the bottom to the top, and that we're and I'm going to put in a couple of key areas for us to be aware of. Here's one here. It's a 236 Fibonacci retracement point. Here's one here. It is the 50% Fibonacci retracement point. Here's one here. It's right in the middle of the golden pocket. And here's one here, and it's the 382 Fibonacci retracement point. Yes, I know. I wanted to remove the Fibonacci from here so that it would be less distracting, and that I've just then drawn lines on that Fibonacci, and maybe in a sense those lines are distracting. But somebody asked me recently, how do you find support and resistance? And I would invite everybody to just look here for 2 seconds at how these lines, which are just taken from a Fibonacci retracement tool, have identified various degrees of support and resistance on the charts there, which you'd look to, and we can see that it's obviously had an impact. Just before we go away, over there on the left, here an impact, here, 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 here. Not got one drawn in up there, but here's an impact, here, and right where we are right now as it happens as well. So with that being said, it should be easier to look back and find horizontal support and resistance using different methodology entirely. This is a methodology to find support and resistance, which has got nothing to do with the previous support and resistance. However, it has everything to do with the previous support and resistance, because what is it that determines these movements in markets? It's everything is interconnected. Everything is. We've come up so far because we went down so far. Price, my friends, always leads price. Always. There's never an exception to that. Never has been, never will be, never, ever, ever, for anything that's ever existed across all time, ever. Always. So on that basis, the Fibonacci that we've got coming up here probably has some sorts of relationships to the movements that we saw on the way down from that high, come on, to this low. And we can see that there is a degree where we have the 236, for instance, lining up here with this other one, for example. You know, we can know that the 50% area here is lining up with this one. We can see that there's this overlap. This is not merely visually coincidental. This is the fundamental underpinnings of how everything in the world works. Everything in the world that we experience as human beings works this way. Everything. This is the fundamental way the universe works as physics and our reality and our ability to engage with reality allows. This is it. So that's not a coincidence, what I'm saying. Anyway, so these movements up. So you have found support and resistance in another way. Why? Because all roads lead to Rome. All of them always have done, always will. Take it off of linear. We found a massive, I pick off a logarithmic. We found a massive amount of life-changing potential in this area, which is otherwise perhaps would go unseen. Put it back on log. What we want to see now at this point is measurements of these retracements that we've had so far, because we know in a Fibonacci retracement that if we're looking for a Fibonacci to become valid, that that targets up here are become valid above here, right? So this is it works. You've got and I'll just stretch this out a wee bit so we can see the 236 Fibonacci here will give you access to the targets up. You want to get targets up here, right? When are they valid? When is it valid to even talk about them as being a target? When is it even valid at all? Above here. That's when it's valid, okay? So we're looking at this downward movement that we've got. And I can just, so again, this is 24-hour time frame for people who haven't noticed that along the way. And what we're looking at is between the high over here on the 9th of March to the low on the 21st of June. And I'm bringing out a Fibonacci tool, popping that into that high, popping it into this low in here. And you can see that the 236 Fibonacci retracement brought us up to this area where there was this gap on the charts. And then we, of course, went above it, had a valid Fibonacci, and targets up here became valid. To revisit what we talked about just a second ago, if you want valid targets up here to be valid, if you want targets up here, then you need to get the prices above here. And we can see that in here on the charts with the movement that we had between those 2 days, March and June, highs to low, left to right, Fibonacci retracement, logarithmic chart, logarithmic Fibonacci retracement tool, putting in a gap here, a gap, which was at the 236. So as soon as we came back down to this area and pushed below, we no longer had valid targets up here any longer at that point. We're operating below it. And instead, we're also staring into the abyss of this gap. So to suggest that we would come down to here and fill in this gap as we have done would make perfect rational sense. However, now looking back the way, due to the movement down here with this low, and I'll just take out a ray here and pop it on at the top end of that channel there, or the top end of that gap. You can see that's where the gap exists from, is in the gaps on charts. Now, this is a gap on a chart, and everybody can see there's a gap on a chart here. The way that you talk about them is from the wick. We've talked about candle bodies a lot here. So the way we talk about this gap would be from this wick in here. I don't know if this Zoom thing works. The way that you talk about the gap is from the edge of this wick here to the edge of this wick. This is the gap on the charts. Okay? So then when I pop the drawings back on again, you see this horizontal ray that I drew in from just here going over and over and over and over. And then we look over here and we see that the prices came down to this precise point exactly. Then you'll not also feel that was in no way coincidental that that's where the prices went to, that's the gap. And we talk about filling gaps. And that's how you fill a gap. So at this stage, we're inclined to think to ourselves, well, how will the prices react when they get to a gap? Something else I talk about an awful lot. Now, that sentence on its own might have always have stood in isolation for you. And you thought, what Rocky just said, how will prices react when they get to the gap? And I don't really know what he means by that. I'm able to hear the words and understand the language, but not understand the meaning of what he's talking about. Well, you should understand now because we've just discussed that in extreme detail as to what the gap is. And, we've got down there, but it's also about how it will react when you fill the gap. Well, where is the gap precisely? At that line. And it came down and it filled it. And obviously it's reacted a little bit immediately right on there by filling that out. It's also a question of, will we get continuation and push on down past it? Are we ready for that yet? We've been in a negative movement down the way so far, so you could anticipate more negativity. The weather today is the most identifiable indicative factor as to what the weather will be like tomorrow. So we have that on there. We know that down is down, and that's the current way that it is. We also know that there's another gap up above us right in here. Now, fingers McFuckety crossed that I get another transformational moment for us here on the charts as I look at the last highs down to that low over there and see where we've come from. Now, if I go up to the very last extreme high, it's quite a distance away. So it's extremely unlikely that the 236 will line up with that gap, isn't it? Where the heck is the low, by the way? Just to see it again. There. Extremely unlikely. We know this is using the log scale and everything else and blah, blah, blah. And that it's miles away. And that for us to actually turn this prices around from where we are now at 150, to start aiming up for targets up above, to use our thing from before, if we're aiming up for targets up here, we need the prices to be above here. So in terms of the here and now on this one, that target remains some way far away from us. And that you would still be thinking, okay, so we're still in what's a downward trend until such times as we've gone up there and filled in that gap. Well, there actually was a gap previously as well. Kind of technically there wasn't, but it's like that sort of looks like that. How would that be? Right? Okay, great. Then from the previous high, so this is the last noticeable high. And by that, what I mean is, and let me just hide all the drawings again, that you can see the prices have got this feature to them where they kind of move in zigzags, right? They move in zigzags. You can see that there's a zig here, a zag there, a zig here, a zag there, a zig here, a zag there, a zig here. We're hoping for a zag that takes us back up the way, right? But there's a high, there's a low. This little candle here is the last high. Okay, so this is the last high. So we take our Fibonacci retracement tool in from our last high down to where we are right now, right? From our last high, where we are right now. And what do we see? What do we see? Now, to make this more transformational knowledge really settle in for you, I'm going to bring out the top targets we've talked about so far here and make them red this time, just so you can see red lining up with blue. If we want to turn the prices around here, where does it line up with? Nearly perfectly with the top end of that gap. Where is it drawn into? Where the prices have come down to so far. What if the prices were to go down just a little bit further? Then it would be perfect. But we don't need to worry about that just now. This is fine. We've got this, and we know this is where this goes to. We know this is the gap area up above. We know that we could, of course, go up here. We know that the conversation on the when the prices go into this point would be, how will the prices react when they get to that point? Will they pull back down again and consolidate within the gap area, or will they go on? Because if they go on, then we go past the 236. So in terms of any critical thinking, there's a thing called critical path analysis. You start off at your point just here, and you need to get to another point in the future. But you know that there are different outcomes that could happen, and that they could go either way, and it could go either way from either of those. And that there are, in short period of time, numerous if this, then that, multiple different parallel universes. And what you need to do is to get on focus to get back to where you would be. We know that there are various different permutations where the prices could go through all different ones of these critical paths to get to where we got to get to. We just need to understand the different components along the way. And this 236 here is very much part of that critical path. What now, having spent that time talking about it, if I take this Fibonacci and line it up with where the actual load did come down to, we can see that it lines up now perfectly in real time as we're talking about this. This is real time that we're doing this analysis. You can see it lines up perfectly. Now scrolling up the way, what happens here? There's 618. And to remind you, if you're looking for targets up here, such as that 618, you need to take out that 236. Looking down the way here to back to where we were on the charts. If you want to look to targets up here, you'll need to take out that 236. What happens if we take out our targets up there? It's the other 236 from before. If we're looking to then take out the targets up here, we need to take out the 618. We need to do this. Here's our critical path. This is how you do technical analysis. For us all. I think it works. I think it's good. I think it's transformational stuff. And on that note, thank you so much to people who've been, supporting the channel and everything along the way. It's been a fantastic show today. It's been good. I feel like we've laid out a lot of knowledge in the time that we've been here, and it's time to check in with the chat and see how you're all getting along. Yeah, great, nice one. What have we got on here? I got internet now. Send me any clips you want done, and I'll get on it. If somebody could organize that with Bam Mama Jamma and stuff like that, then that'd be cool. I'm sure that Amanda and all the other ones, and I don't want to pile work onto your plate, Amanda, but I do want to pile work onto Chippy's plate. Carissa, could you do me a favor and tell Amanda to sort Bam Mama Jamma and anybody else out in terms of a team working together for clip stuff, if that's a thing, so we can organize that out together. That'd be awesome. I think that's the way that we're supposed to be doing things as we develop in terms of our sort of organizational community aspect of things. So thanks so much. Just going back up here, let's see. What's Banana Fridge well deserved? What's well deserved? What's Banana Fridge done? What you done, Banana Fridge? Where are you? Where's Banana Fridge chatting? Is this only showing me the live? Sorry, give me a second here, because this doesn't show me. Does this show me all of the chat? I want it to show me all of the chat. Froglord's asking me here, how does one predict the time of a price target? Yeah, generally speaking, can't really, to be perfectly honest. There are ways of doing things, and I'll give you a couple of quick examples right now with regards to that. But honestly, 99.99999% of anybody talking about anything that sounds anything like that is complete and absolute bollocks to the 50 billionth millionth degree. Okay. You've got price action operating like this. This could have a pattern around it, and you would typically say that if this represents 100% of the pattern, that the breakout generally will occur around 75% of the way into it, which means that given that this axis here, the x-axis, is of course to do with time, then you can work out when time targets would come in at. Obviously, for the so that you can, this is your chart, your x and your y, and then you can try and time things. There's that type of methodology. There's also other methodology. You can use some things like where's this trend-based fib time. So you could go from here to here to here, and you'd be like, oh look, this end of this zone is where we'll typically find our next turnaround point. Then you could have looked from this one onto this instead, and done a trend-based thing like this. Right? And then you'd have been like, oh, look, this area lines up with the 382 Fibonacci trend retracement point. This inflection point here was at the 618 golden pocket. We can see that we came in for another low here at the 886 before moving through here up and then actually taking out our prior high as we went through the 100% retrace zone on this one. In fact, that's more than 100%. That's different on the Fibonacci retracement. That's actually as we went through the 300% Fibonacci time-based fib zones. That's where we actually put in our all-time high. Now, at this point, you might be wondering, oh my God, Rocky, is it just a coincidence that both of those things laid out like that? I couldn't tell you. I couldn't separate it out. I don't know if my sort of familiarity and expertise and ease and casualness with charts over such a long time and my relationship with them allows me to do this in which a way that I could draw on a fib-based time zone thing and actually have it work on the random, instantly drawn in example, or if simply that these things are so fundamentally working and that they do work that you can use them. However, I would caution anybody from putting too much stock in the idea of the time-based Fibonacci zone from working out really for them that well, although it is something that can be informative. Other things that you can do in terms of time as well are things like fib circles. Here would be a type of thing that you could do, and you might have thought to yourself, well, and here you can see that this area was just at that point of the fib circle, that there was this area and this area, as you can see, all coming through at times whenever stuff happened on my fib circle. So you've got that, and then there's other stuff which comes directly from the mouths of liars, and then there's stuff which is like too obvious, which everybody knows. So if you're talking like, and no offense to anybody in particular who talks about any of these things or likes about them or anything, and I'm not making any comparisons with me and anybody else or any of that shit, so no need for disclaimers here. But if anybody were to talk about things, for example, like quad witching hour, the FTD cycle, and the dates around it and stuff like that, it's bollocks for the most part compared to anything else you'd do in terms of not being bollocks. Right, brilliant. Okay, cool. So that's that. Back over here because we're back onto the chat again. I wanted to bring this out. Let me my chat box, pop it up on screen, and let me see it so I can chat to y'all and get these things on the go. Go now. Hurry up. Amber. I'm gonna have to learn how to do some, I reckon. Wow. Got in before realizing I needed to set up stop losses prior to entering a trade. Right, back over to the chat for a split second since we're doing education. I really do want to cut it all out from next week because you can see how much I do and that. I got people asking me before about stuff, and people have been talking to me recently about things like, and shout out to Stefan S, great stuff, good stuff, right? You got a guy here who's looking at charts. Say he's looking at a chart that looks like this, and then he's also got a trading strategy. His trading strategy is whatever, doesn't really matter. Here's an example of a trading strategy. A lot of people have got trading strategies, where they've got a moving average that they use, whatever, and they've got one moving average that looks like that. Let's make it a different color or something to try and make it. That moving average doesn't work very well. I could actually probably just be better off doing this on actual charts. But anyway, you've got so you've got a moving average. Let's say that's the moving average, right? And then you've got another moving average. And you what you're doing is on this thing is that you're actually trading this when the green one crosses the yellow one, you're going to like here, you're going to go short, and when it crosses the other way, you're going to go long, right? Trading strategy, simple trading strategy is a 2 moving average trading strategy. I've got a video about this on my channel, for example. So you went short there, you went long there. This doesn't really work because obviously you can see the cross happen before the move. There you go. Right. And then you went short here. You went long over here. You went short here. You went long here. You went short here. Right. That's what people kind of talk about. But actually, what it really means is that you sold. Well, let's just not start off on a sell. Like you bought it here and then you sold it here. And you bought it here and you sold it here. You bought it here. You sold it here. You bought it here. You sold it here. And what that means is you're taking a signal of 2 lines crossing as when you get into the market, and you're taking a signal of 2 lines crossing as when you get out of the market. This is not directly to you, by the way, Katie Babes. It's just a lesson for everybody in general. And what this is known as is systemic, is system. Is you're a system-based trader, and you don't have any discretion to what you're doing. You're relying purely on the system, and you're just going with the system, and that's it. And what the system is doing is it's determining for you both your entries and your exits. That's what that's doing for you, because this was an entry and this was an exit. And that's what that system's doing for you. Now, let's just take a quick second here. This is the Bitcoin chart. We're down at 60,000 at the minute. Damn it, it is. This is the Bitcoin chart. We talked about this over the last couple of days. And I talked about how, I talked here about how at 67,000, it was going to go to 62,000 or whatever. So for me personally, I didn't actually do this. All right, busy, do a lot of stuff. But I mean, I spoke about it. The video's right there. Typical for me to do this sort of thing. But I just want to be fully honest, for some weird reason to have integrity, tell you that I didn't specifically make this full move. Actually, what I did was I I don't even care, right? I made it. I made a tiny. I just took a tiny little bit of a trade on this one because I did it with high leverage and I didn't want to risk anything. Okay, and I scalped this move at the top end of it. Right, whatever. I didn't actually hold on to it to the 62. Doesn't matter. That's fine because then down here around about the 62 area, I opened up a little bit of a position to try and scale into a little bit to see, and I'll be managing my risk as well around these points. So when the prices were moving up as well, I was able to say, well, I'm long on this and I know I'm going to take profit up in this area in advance. And then the prices moved down and I says, well, I know that I can short this thing and I know I'm going to short it from here and I'm going to take profit here in advance. And then I know as well that I'm going to try and enter into position here. If it doesn't work, then I'll cut out my losses. I'll have a tolerance that I'll maybe think about getting into, and then from here, I want to take profit here. And I've decided all this and spoke about it days ago in advance. So there's another type of trader, and it's not the systems one; it's a discretionary one, where maybe a cross happens, and that's what gets you into position. And then maybe you take out the 236 Fibonacci retracement point, and that's what gets you out of position. And maybe you get a certain number of candles coming on, and then you use the Tom DeMark indicator that says that this is a 9 and that you're going to go up or whatever. And maybe that gets you into position. And then maybe from that area, you look towards where your Fibonacci retracements are, and you see that when you got past this point, that it happened with a V-shaped recovery, and that this was taking out the 886 and the 100%. And then you're on your way up the way here, and then you hit off the 382, and you come back down, and maybe you take profit at that point, and then you get back in again here at this point because you're going up the way. And maybe you trade like this. And maybe because you're that good at trading, you don't need this sort of system thing because you've got a billion different systems. Because, on the way up here, while this hadn't crossed yet, maybe the prices had moved up outside of the Bollinger Bands and you were anticipating a retracement back down to this zone while you get continuation on the way, and you hadn't got a sell signal because your moving averages look like that down below. They look like that. They're spread apart. They're not going to cross over, and maybe you know about these things, or maybe you see that there was a cross on a moving averages over here and that actually the price has been up here, and you know about the significance of where the price is in relation to this thing at the time, and maybe you trade like that. So to say specifically that you need to do certain things is wrong. But it would be a good idea for people who are trading on a chart and they get in here to have, at the time when they open up their trade, to put in a stop loss to say that if the prices move down here, that I'm no longer interested. It would be wise for them to put a profit taking target in there so they can take some of the money off the table, so that when the prices go up here and their emotions start telling them, oh no, man, you want to stay in this because things only ever go up and never, and everything I've ever learned in the past is going to be completely wrong. You won't go crazy and you will take your profit when you're supposed to take your profit and so on. And maybe there'll be a billion different ways, but there's people who think that to trade, you need a system like that. And there's people who think that to trade that you don't, and that and whatever. There's plenty of different approaches to it. We're all welcome to do what you want to do. Okay. So just know this. Just know that there's so many different aspects to what trading is. And that there's a lot more to it. It's like the technical analysis that I do is better. And it's specifically designed to be integratable with your own technical analysis. You should be able to look at my charts with a lack of colors, with plain Fibonacci on them, with me using a white drawing tool, with me drawing out in clear areas and explaining in clear ways how to understand charts. In fact, let's do this together real quick. In fact, let's just go channel content and let's go chain link always spot on. Right? Was that what I called it? Always spot on. Shout out to Miggle Figgle Tiggle who watched this video yesterday. And let's just look at it, right? Let's just look. Now, people talk to me after I do videos and tell me that it wasn't understandable. I don't know what you're talking about, Rocky. I didn't quite get it. Here's a video. It's 4 minutes and 25 seconds long. It's 4 minutes and 25 seconds long, right? And here is the chain link chart. "24-hour time frame. When was the video done? Video was published on 31st of March. Over here, 31st of March, right? Now, I obviously titled this video on the day that I published it in advance. I didn't know when I published this then well, I did. I knew then that it was always spot on because I'm always spot on, right? I'm always am in that. But, I didn't know then on the 31st of March, that 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 I was that it was the right decision necessarily to make this to say that 31st of March, 31st of March. Is that what that said? 31st of March. There, prices went to there. Is this wait? Was that 2020 or 2021? Where's my video? Published on 31st of March 2021. Let's just see how it goes, right? Miggle Figgle Tiggle was watched this one last night. I skipped into it and I saw a couple of different things about it. Thought it was interesting. Thought it's worth pointing out. Let's do it. Let's just watch it. 4 minutes long, and you can see what you think for yourself. Or was it Crypto Planet? Yeah, cool. Where's my volume? Friends, chain link in this descending triangle. Where are the key areas to be looking for? Will we see a breakout soon? Is it possible? I know volume's low, right? Just now, please hit the like and subscribe button. Massively helps the channel. I would really love. Hi friends, chain link in this descending triangle. Where are the key areas to be looking for? Will we see a breakout soon? Is it possible? All that and more just now. Please hit the like and subscribe button. Massively helps the channel. I would really love to see you during a live stream as well sometime. So be sure to join me for that. Time for intros anyway. Looking down there, you can see that's where the live chat's going on, because this is, of course, a live stream. But just doing a quick summary video for the folk back home, everybody not tuned. First off, because this is my own video and I'm allowed to interrupt myself. Sorry, Rocky. It's okay, Rocky. Don't worry about it. We can see quite clearly here that I'm talking about movements up outside of this if it were to happen. I also talk about the exact price points that you need to be aware of and the areas down below where there'd be risks at. Over here in the Link USDT chart, you can see we're talking about it in 31st of March. We actually did go on up here. We went on to higher highs, etc. $37 was up here at 35. Pointing up here to 35, 36, 37. You can see that from 37, 38, 39, 43, that it ran through those prices that we're talking about here on the video in the background, where I'm pointing that out for reasons for it. But actually, in this thing, I also give you the long-term downside price targets and what key areas to look out to on the way back down again. Now, this is months in advance. So we went up and we did the upward movement. Then we came back down again, and there'll be key things to be paying attention to are things like the $26 price point that I mentioned, the $20 price point that I mentioned, and then the ultimate downside target with all of this upward movement as well, given just the structure in the markets. Now, in this area of time, there was a descending triangle, and it could have led, let me just see, there was a descending sort of triangle sort of thing. It could have led to movements down the way. Here's the two lows at the time. That's where the video was done at. It could have gone down the way. And if it were to have gone down the way, then we would have had targets off the back of it. And if it were to go up the way, we would have had targets off the back of it too. So there's target towards the top side. And obviously then that's where that came in at. So tuned into live to see that Link is got a few key areas that are really, really crucial for us. 2880, let's call it, where the 236 Fibonacci is. Want to see the prices pushing up above that. Confluence in this area with the downward sloping line of the descending triangle, and that is, of course, as well confluence with the previous 618 Fibonacci golden pocket retracement. All those things explained in extreme detail today. Obviously, not necessarily the descending triangle pattern, but what have I just said there? 236 confluence to that 618. 50%. There's tons of reasons. This is a really big number. 2880 moving up past that opens the door immediately towards another 10% move towards the top side. Very, very nice. Fake. Not asking for people to take loads of money off the table. Talk about taking chunks off here. Looking for 10% moves. Just 10% moves. Thinking if somebody put $1,000 in and got $1,100 at the end of it, that's good enough, and that you shouldn't need to necessarily try and do anything better than that. But their massive is massive more potential. But I can deliver that. Breakout territory for many moves outside of this ascending triangle, though, or descending triangle, do come in at that zone. Be aware of 31. So if there were to be any fake out territory moves, then they come into that zone. Be aware of $31. We moved up to $32, and then we pulled back down from 32 to 29. So there's a 10% drop down in price from the point at which there was the fake out zone, while we were looking for movements towards the top side, though, thereafter. So I told people to go for a 10% move, perhaps, with the anticipation of there being that being where the fake out zone was. So if you'd have just done exactly that, then you'd have had the opportunity to buy in on a retest days later, which I will have been talking about, no doubt, probably in the following days. But you know, here I am predicting the future, right? And that's what it is, okay? But even though it's impossible to predict the future, this is as close as you can possibly get to it.
50 is its importance. Now, that's the two upward side areas. Of course, if we do go on for them, I want to see them happen with volume. I want to see things like the stochastics able to turn around here.
All right, all the explanation of what you want to see along the way.
26.
And then I give some risk management
with a degree of momentum. And I'm going to say that that zone is 26.90 or $26 really.
So I said then from people at $26, 31st of March, you'd be managing your risk at $26 if they were to go down the way there. By the way, that always translates to where your best buy price is, obviously. I mean, you know, where the least amount of risk is, we'd be buying this at $26 as opposed to at the prices where it were at the time. However, you could get in at the prices where they were at the time and get a nice 10% movement, but you'd be managing risk here. The prices went down to 26.13, right? They went down to 26.13. Where the body of this is 27.85, 27.76. It's like 26.8, no, 26.13 is where it went down, is where we manage it. Wait, is this actually even after that movement has happened? So anyway, it's just telling you to maybe managers. I don't know right now. Maybe that wicks already happened. I'm on the 4-hour time frame there. That already happened earlier on in that day, I guess. Right? Probably. So that's how you would manage it. Whatever.
The range of that dollar is important for us on this 4-hour time frame where we're seeing the 50 simple moving average coming in at. We've got this rusty colored line in here, super important. So much interaction with this in the past at 27.50. If we can take that out, then very, very good. And I would say that we could easily come on and try in for another 10% move up just to within the range here. Now, bear in mind that while that looks like it's not very much space, it totally is. 6% move would get you towards the top end of that. Towards the downside here, 10% move. Plenty of trading to be had here. And that's what we're looking for to try and capture some of those information to cover movement. You know, on the RS, we could well be support. Then link price turns into the back.
Right, and then talking about this here, if the prices were to drop down. Now the prices didn't; they went up the way. If they had of, what would be important, and just so people would know in advance, because I do the long term and the short term and all the analysis all at once, all the time. You know, so this is if taking out this zone here. Off the back of this pattern would have led to movements down the way towards this area. Ultimately, then we did see movements down towards that area, and we did go down to $15 as well. So let me just show you then here.
And price quite quickly going down towards $13, $14.
$15, $15, $13, $14. Now, obviously, this descending triangle didn't directly lead to that, but is there, and ultimately, then throughout this entire period of time, I was looking back and thinking we could go down to this area, and it's not a surprise because there's plenty of reasons for it. That's the 236 in there. Or sorry, the 786, the 618 golden pocket. So the 618 golden pocket, like just off the back of this, on the rise up. So all the rise up, then you get to this point here and you're like, where do you measure it from? Well, you measure it from there to there. Where would you be likely to go to? Where's the 236 at on this one? 236 right here. Where does it line up with the top end of where that descending triangle was? So while I wasn't saying this descending triangle led us to that price point down here, I'm saying that the world always works like this, always has worked like this, always will work like this. This is where we find about it. This is where we talk about it on a daily basis. And thanks very much for being a part of that, essentially. Now, you could go back and you can take a look at any of my videos in the past, any of them, and I would be more interested in knowing the videos where I got it completely wrong, of which I think there's maybe 3 out of 2,700. So if you can find them, well done. Like where I got it completely wrong, there's like 3. And then there's ones where I got it, where I said things which you know, when I'm saying when I said stuff that I could look back now and say that was wrong. I shouldn't have said that. And that 3 of them maybe. And then there's and that's a maybe, because I can only remember one. And then there was or no, two. I can remember two. I remember feeling twice. And then there was I don't know, whatever. So anyway, that was a video that I knew I got bits in. So how about instead we just choose any video. Rows per page. 50 rows per page. Next page. Then we go up to the URL at the top. And I go, where's the page number? Filter. Page, the date, sort order, send in 7 date. No, I'm not getting, so let's just go flicking back into the past then. We're only back as far as May. That's not very far ago, was it? Let's go back further to something that feels like before you'd have even have tuned into the channel ever. To see how, this just to see, now this isn't to show off. This is to see if the likelihood, this is to see if the TA that I'd done in the past lines up with things that you might have liked to have thought about at the time. Here's an example. GME technical analysis. This is actually a bit of a joke, me putting this on, I should say, really probably for everybody. 232 views, 16 likes now. An hour and a half.
And as you can see, since we did the TA the other day, things haven't really changed a massive.
Oh, I did the TA the other day beforehand. So I actually told people days before that they should be buying it at $32. Then they went on and did some more of that. Anyway, that's a good laugh. That wasn't a video I wanted to bring up. That was just to show people a nice little picture of GME and a rocket towards the moon and all that. And all that good stuff. Anyway, just so you know that I did exist and that I do stuff and whatever. So yeah, we want to go back to some completely feeling like completely random. Well, not completely random, but just like some part in the past. I don't know, whenever, right? So here's a video. I don't even know what it is. Oh, Spy, no, Tezos versus Tezos and Link. How long is it? It's 18 minutes. That's too long. 20 minutes. So they're all too long. I'm educating people in these. See these videos that people say people say they don't understand them. I mean, why does it take me 20 minutes to do the technical analysis? It's because I'm teaching you what it is that I'm talking about. That anyway, or whatever. What do we want to look at? These are all too long. All these videos, I'm trying too hard in all of those videos. Let's see if I can find one where I don't try as hard in. Smaller, less than 9, less than 8 minutes. Less than 8 minutes. Come on. I think there was a 7-minute one there. I want like 5-minute video. Here's a Tezos one that's 8 minutes and 13. Might as well put it on. It's annoying making videos that are so. I mean, I get it. I know why. I know why they don't have thousands upon thousands of views, but I know that I try as hard as I fucking can. That's all that matters. Skip into it a bit.
Has reached ideal.
Want it to not be a bear flag. Respect the traffic lights. In crucial box zone on USD chart. Ethereum pairing has reached ideal baking temperature in the oven of price action. What was the date here? October 6th, 2020. October 6th, 2020. Do I still have that chart? I think I might have accidentally chucked them all out with this one. Is it that one? Oops. Not that one. This one's so busy. October 6th, 2020. Oh, it was so far back. October. Well, anyway, here's the chart. October 5th, 6th, 2020. So here we are. Here's where we're doing the TA. Let's just see how it goes, eh? I have no idea how it'll go. This is where it is. Pretty hard, pretty tough. Tough ask in this situation. Got to be fair with myself. See the big pullbacks that we're having, the failure to take out the 236s along the way. You can see just in here though that there was a bit of a V. Didn't quite manage to get the proper follow through. I mean, it did that you'd have wanted to. We pushed up a little bit higher, ultimately coming back down for what was this? Yeah, a lower low and to trend on down the way. At the time that this is happening, the indicator below, that's stochastics. I want to see here. What's this? Yeah, bullish divergence coming down into these lows. Oh, that was where's the October 6th? October 6th in this area, just here. So this is a real out of all of the places to do the TA at, this point here's gotta be one of the hardest places to do it at, right? Is it? Isn't it? I don't know. Let's just quickly kind of check from that high to that low in here. The 236 is way up above our heads, or in no man's land. The moving averages at the time, what are they like? Yeah, we're just negative, negative trend in price action, and talking to an audience which is all massively reticent to hear you say anything negative at all. That's scared of shorting, that doesn't understand prices going down the way, and you're trying to teach them and help hold their hands at the same time, right? And the way that I'm doing it in this area at the time was I've got a traffic light system that I've laid out in terms of understanding the trend. What the fuck, Rocky? Man, holy shit. How good do you want it to be? Anyway, let's just see what they're talking about.
Baking temperature in the oven of price action. And just checking in with what that really means is we can see that it was the ideal baking temperature. And what happened? Well, we put our pizza right into that oven and we broke towards the top side outside of this wedge.
How freaking positive. Well done, Rocky, for doing such a good job being positive when the price action was such a shit. Look at this shit price action that is here to have to deal with and analyze. So what did I come together with? What did I manage to pull out the back here? I mean, fucking impressing myself overall here. So there's nothing on for us in terms of Fibonacci and whatever else, but there's a wedge that you could get, right? A wedge. Maybe I've driven it in from that high down to that low. Maybe it's on the 4-hour time frame. Maybe I'd get rid of the indicators down below and I'd hit the auto button and look here. Where's October? That's right. So July 2021. In fact, I'm on the wrong chart. Might as well go with this chart now. This is not to show off. This is to help people understand what I try and do all the time, right? It's to help people try and understand what I try and do all the time for people, all the time. And why? And when people say to me, you don't understand what you're saying, just be aware there's going to be no education. There'll be shorter videos, no education, snap your price targets, no less value, way less, right? You know, for instance, right, this TA on Tezos in this period of time. Back next week, how the way that I'd have to do it, simply put, like, oh wait, where's the 6th of October? Where was the 6th of October? Over here. So that would have been the low, yeah. Would have been to say, hey, it's we're below the 50 simple period moving average here in the 4-hour time frame, and we're below the 236. I'm still bearish on this one. That's what it'll have to be, right? That's what it'll have to be. And the reason, and I'll not talk about these things, and I'll not talk about these movements. That's what it would have to be. That's what will have to be next week, because that's all that people want. That's all that they're capable of understanding, seemingly. And this isn't said with resentment or anything at all. I hate having to put qualifiers in. The thing about it is that I'm not from America, and I'm not upset or negative right now at all. I'm just Scottish, and this is how we talk, and that's all it is, right? Not everybody gets that. Right, going to go back to my video. I want to see what I had to say back then. I'm really impressed. Look, this wedge down the way. What was it, 24-hour time frame? Nice little wedge down the way. Little bit of a channel coming out here. Great job, Rocky. You shouldn't have bothered, mate.
We had the full measured move of it. Well, we most certainly have not. We're currently in fake out territory. If we put on this in terms of looking up towards the top side, we have our targets of the 50 simple, the 55 EMA, and of course, most crucially of all, the 236 Fibonacci retracement.
Oh, that's versus Ethereum. That's versus Ethereum. I'm looking at the wrong chart, but I'm looking at the wrong versus Ethereum. Let's just see. Do I go on to look at it versus dollars? I probably do. Is this the whole video versus Ethereum? It tells that yet again. Actually, says it is. I've been saying it for ages. Where are we versus dollars? Right, we're versus dollars here. So this is me looking versus Ethereum. People at the time were interested in whether or not Tezos could compete with Ethereum and do better than it. It's really done very badly versus Ethereum in terms of that performance. If that's anything that anybody cares about, it's done shite. It's done shite. It's going to continue to do shite. That's one of those things I talked about. This is another one of these wedges within wedges formations as well. I was trying to talk to somebody recently about VLDR, I think it was, and the breakouts. Vic Vince. I was talking about the Vic Vince, the breakouts. Remember that, Vic? And I was talking about the wedges within wedges. You see, if you've drawn this TA on here from that point on down, you'd have got a wedge the whole way around this whole thing, all the way from what's that on that chart? From July all the way down to December. So for half a year, a wedge, within which wedges. That was the point I was making before about VLDR. This type of shitey lack of good performance, by the way, equally would be what would be you'd be wary of if they were looking at VLDR. And we're about to talk about dollars here, I suppose, in a second.
At the same time, but over here in the DMI, what we think the trend was DMI, although we're doing that bit for that yourself in your own time. The current prices for the dollar, of course, at $2.20, mean that we have come.
Can quite clearly see it had a big wedge in the background, which we'd broken out of. So that's good to see. Let me just look back here. So this was the so I'd had this technical analysis for this coming in October, whereas on the run up to this area, you could see I had a line here which is broken out of, or somewhere along those lines, or it's down. Where is it that we broke out of that line? Where did we break out of it? Or was it here that we broke out of it or something? Yeah, I don't know where it was, but there's you can see that that's happened on the video in the background at the time. So it obviously people getting carried along for months. Look at that. There's a wedge over there months and months before talking about this thing. There's a descending triangle actually. And then it did the measure move from that descending triangle down to there. You can see that's the measure move. Look, you can see that from about $2 to $3, $3. Where's that take you down to? $2. It's the measure move. And inside that wedge, then we went up. What's that? The 1618 movement from that high to that low, the 1618. You know it is, right? On down anyway. Outside, broke outside of this area, went back up, retested it, living off the moving averages, down again here.
Come up towards the sort of lower end of where that Fibonacci retracement tool is that I drew in before, of course, in the past. In fact, I'm going to remove that one from there. It's no longer necessary, but we are actually still miles away from the 252, 236 area, which is, of course, of utmost importance if we want to see targets towards the top side come into play. The first one, of course, there at that 252 area. If we did take it out, I'd be happy then to look towards these following targets in here at 291, then following up with that at 320, and then here for a big old smiley face in at the 618 golden pocket zone there at $3.50. But we're miles away from doing that yet. Let's first off kind of keep our pants on and look towards the 21 EMA and say, can we break that? If we do,
miles away from doing it, let's keep our pants on. Let's see if we can get to the 21 EMA and all that sort of stuff. Not bad, not bad. Looking up here, I don't know, 245 is where it went to. Obviously, and it dropped on down to 178 thereafter, or even lower, in fact, to 150. I don't know if like the other things as well. I don't know if I go on to mention that, you know, you'd be struggling to look above that gap, the resistance, obviously, of having broken outside this channel, the likelihood that you retest things before moving on down deeper anyway. I mean, there only are so many things. It's like I give everybody the textbooks, the entire every relevant section from everything and every paradigm of technical analysis that's ever existed to make the decision, which is the correct decision. And every single clip that I do, it's not happening anymore.
That 224, things become quite positive because we're taking out our previous high there. And what we have is a scenario where we're
talking about how things would get positive because we're taking out our previous high over there. And that's true, right? Look at the charts. Like in here at this time in the 13th of October, great. We took out our previous high. Then we pulled back down. We didn't take out the lows when we actually did go back down again. Could it have turned around? Could it have turned around? You know, right at the 236. It didn't, though. It didn't. It didn't. It pushed back down the way, and the struggle to take out that area. Obviously, that's important. Fibonacci works, by the way, folks. Okay.
We had a low, a high, a higher low, and then potentially, if I kind of fit a question mark in here, does that look like a question mark? Oh, there's a question mark for us in this, where we get to ask a question in this area as to how we will see the further performance as things go forward. I'm looking towards the 233 moving average here on the 24-hour time frame to give us a sort of indication of real trend change turnaround. Of course, the 200 simple here on the 4-hour gives a bit of an indication of that, and we can see here the sort of the similar candle that we had on the Ethereum pairing with regards to this nice movement towards the top side, taking out the major moving averages which are nearby us currently. This does give us the option as well, or the opportunity to have a positive cross happen on the 21 and the 55 if we see price action maintain itself above the price of $2.15 over the
wow. I didn't read the price out there, but you could see my mouse flicking around on it when we're at 245. You could see it. I looked for it. I could see it. Could you see it? I don't know. It doesn't even matter if you can see it. The video's there. You can go and watch it yourself. I'm not going to remove it or anything. Nobody would. Why would you bother? But anyway, up here came in to this area. This is where we're going to get to ask a question. We're going to get to ask a question in here, I said, as to whether or not, and if we can stay above 215. If we can stay above 215. And what did we do? We went up there. We asked the question. What happened afterwards? We went back down. Where's that price? Oh my goodness, it's below 215. Oh my goodness, it's below 215. I've said it all, everything. Anyway, what possibly could it go on to say now? What possibly could it go on? What possibly? I mean, there's still time left. It's holy shit.
For the period of the next couple of days. Let's see if that can happen, and then we will see a reversal there on that front. That's quite good, having followed in from a sort of short-term head and shoulders pattern here, kind of playing out the reverse against the upward move there, but that's a little bit rich. Instead, what I'd like to point to is the double bottom that we had over here, and the fact that we've come in with a higher low so far, haven't had a high, and if we take out that territory at 230s, then of course the question mark that we spoke about already really does come into play. Same thing applies with the Bitcoin pairing, but we have it all.
I was done at that point. So I did it. I did Tezos, and I did Tezos versus Bitcoin versus Ethereum and versus dollar in this video. So for the Tezos people out there, I told them how to trade it versus Ethereum, Bitcoin, and thing all at the same time. Where's my Bitcoin chart? Tezos versus Bitcoin. They only ever nominated for me for one community reward. They've got Tezos, by the way. Tezos is fantastic, right? They've got a foundation, and the foundation is always from the very start of the community rewards thing, giving out Tezos rewards for people for being part of the community. So I've always put myself forward as being part of the community. I've talked to people like xtz.news.com who set up their website about 6 months or a year after I started doing XTZ technical analysis. And they wanted to use me on their front page all the time with their technical analysis and stuff like that. And I was talking to lots of different people. I really like the guy Kevin McCraby, for example, who's big in the sort of the stable Tezos coin and the Queepy swap and all this other stuff. We were friends with each other on Twitter and stuff. Great guy, really lovely guy, really good person in the industry. So really fantastic people in the community, and I'm really big fan of the community. And I'd say to them all the time, I'll do this technical analysis forever if you nominate me for awards. So then I asked them specifically, and they nominated me for them once. But after I asked specifically, and I was like, if this ever happens again without me asking for it, I'll do this forever. And it didn't happen, right? Every month they give out thousands of Tezos every month, and there's different awards you can get. You can get educator award, community award, so many different awards for Tezos, and they're worth 50 Tezos. 50 Tezos. That's all it was, right? 50 Tezos. I'm asking for Tezos, saying you can put me forward for this thing. $100. Just $100. That's all it is. It isn't the money. It's not the money. It's the community saying, let's keep doing this. That never happened. Anyway, look at this. This back in the day. This is February 2021. I was still doing it, talking 6 months later. Or, well, not 6 months later, a few months later, still doing it. Got the bottom. Oh my God. Who got the bottom? Who explained it at the time? Fucking hell. It was only me. Only the only guy that does technical analysis for Tezos on the reg. Anyway, so where is this? I want to look for October 6th. And I should have tuned out ages ago, but I'm going to here. Oh, there's my traffic lights. There's my traffic lights. Right? Traffic light system. Red light, not good. Orangey light, okay. Orangey light, still okay. Green light, good. Simple stuff, right? Brilliant. Excellent. As we can see, the exact pivot on the market, that's where that is. This is where the stupid traffic light system. So there you go. Going back to the start of the video. Oh, actually, no, you can see it there at the end. This versus Bitcoin. Sorry. This is this traffic light system. There it is there. You can see you can see it. You can see it. So it was okay. It was okay to be long. So here's me saying it's okay to be long here. Plenty of good reasons why we could see a turnaround. For example, this distribution, this pullback to this area is exactly what we've seen with Bitcoin. Now, Bitcoin is just putting all-time highs. Bitcoin's just putting all-time highs over here. So we could have seen this sort of thing happen. and I'm saying, and you could absolutely stick your house on it, do whatever. I didn't ever say that to people. Don't give financial advice. I don't give financial advice, but I'm saying traffic light system, and look at it. Look at it. As soon as it does that, as soon as it's down there. Right. Anyway, I don't want to take the piss. 11,000 subs, Rocky. Yes, Brady Pearl. Thanks so much, and thanks so much to every single last 11,000 of you. Talking the other day with Jamie, he says there's this human phenomena where you can't actually name more than 100 people at once. I actually think that not only could I name more than 100 people from my life, you can look this, Google this thing up, I could name off the top of my head at least 10 different family members, every single person I ever went to school with across 2 different schools, every single university lecturer, etc. ever had, every single person I ever worked with, every single person who ever worked for me, and every single person I've ever been friends with. I feel like I could say that. I mean, I know off the top of my head, I could name 20 Spanish people. And that would be like, that's 20%. They're not even in this country. And I've not spoken to them for a decade. So I don't know if that thing's necessarily true. I know that I could probably name 100 names from the Discord alone, right here. And I know that I could name every single person who's watching this chat right now. I know it. I know that if my life depended on being able to name 1,000 people, that I could easily name just 1,000 people from the 11,000 people who subscribe to the channel. I could probably name 1,000 of them if you just gave me enough time. I don't think that phenomenon really would necessarily apply to me. I'm so incredibly proud and pleased and humbled and so glad that you're here. All of you. Thanks so much. Massively. Thanks so much, Brady. Thanks so much, everyone. Right. Sweet. Anyway, I'm done. No time really for the reverse roll call to name everybody, to name all of yous. But, Amber, Brady, Apple Blossom, Ghost of Jiu-Jitsu Guy, there, Chris, Wolfric Doomslayer, Frog Lord. Check out his music. Highly recommended. Chris, Katie Babes, Jay Ray, Natchu, everybody in there, KP, all you good people, thank you so much for all of that. And then here's the super chat guys. A lot of these donations I effectively ignored as they came in at the time. I didn't mean to treat you badly on that front. I'm so, by the way, blown away by the 11,000. It's so amazing. We got to 11,000 last month, but it was fake, and we celebrated fakely. It's been what's it been? It's been a long road since 10,000. We got to 10,000 in July, or June, July, August. Was it July? July, August, September, and we're in October now. So 3 full months to get that 1,000. To get to 11,000, and it's amazing. I'm so proud and pleased. I think it's wonderful. I think that things will go exponentially. I mean, it took certainly 3 months is half the time it took me to get my first 1,000. So it took me 6 months to go from 0 subscribers to 1,000 subscribers. 6 months it took me, and it took me 3 months to go from 10,000 to 11,000 subscribers. So things are getting at least twice as quick as they were before. And that is cool. It only feels, in a sense, but if I look at my stat numbers, it's exactly the same as when I started. There's twice as many people joining up over a number of months as there were when I started my very, very first YouTube video. So that's fine. I've got the same attitude as I had when I started it. I do it for the person in front of me. And that just happens to be you right now. And I really appreciate it. And to all the other 10,999 subscribers to the channel or whatever there is, thank you. It's been a wonderful 22 months doing this, and it'll be another wonderful 22 months into the future doing it. And thanks so much for being a part of it. It's really fantastic. You will grow exponentially. The more followers you get, the faster it'll be. I suppose so, but this is exponential. It's already 100% quicker than it was 22 months ago, right? If in 22 more months we can get to the point where I get 1,000 subscribers every month and a half, that would be cool. That would be twice as quick as it is now. And I'll just think of anything other than that as a bonus. My stats on YouTube aren't subscriber stats and stuff like that. Just look at yourselves, look around you. You are the real quantitative stuff matters for people who can't understand the qualitative side of things. Just ask one person in the chat there. Qualitative side of things, I don't care. 11,000 though is amazing. I'm super blown away to be there. Anyway, thanks, but whatever. until such time, until the point where we get to the channel's growing at 1,000 people a month or something like that. I don't really see it as being any change, although it is 100% quicker than it used to be. Or take 50% as long. Right. Bam Mama Jama, thank you so much for your donations earlier on, mate. Thank you so much. Great calls on GEVO. You and Jamie were spot on, to be fair. Oh, really? Oops, that's the wrong one. Oh. 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 Yeah, right, cool. Anyway, that it wasn't like everybody. It's not like it's run to the moon though or anything. I can't remember what I was talking about at the time. Jess Smith, thank you so much. Rob Donnelly, thanks for becoming a Patreon 2 hours ago. It's really appreciated. Bingo. Space Banana, thanks for that 2 hours ago as well. This stream has lasted for far longer than it's supposed to be. About 2 hours longer, an hour long, at least an hour longer than it was supposed to be. Thanks Ashley for the donation earlier on and for checking out Zella. Thanks Space Banana. Thanks Bad Mama Jamma again. Thanks Brewley for that 24.45 and putting your name on something. Can we take a look at gold today? We did take a look at gold. Eric Sorensen, $20 super chat. I've lurked away too long and rarely catch you live. Yep, thanks so much for that. Gold for 4-foot Doomslayer, $9.99 super chat. And Dober Mamba, $24.69. Can you... Matt. Dober Mamba, man. I didn't mean to leave you out. Right. Look, this is not good. It's doing the not good stuff. This is the not good stuff we talked about it being able to do in terms of what's not good, but it's actually good because we're looking for 335. 335 is your best entry on it still, mate. Coming down here at the minute, not much of a surprise to us. We've been doing the TA on this one saying that this is... I'm sorry, man. It's kind of likely this was going to happen. All right. Space Monkeys just chucked in another $9.99. Thank you so much as well. For that one, I think. Or did that happen earlier on? I don't really know. Yeah, $9.99. So thanks so much for that as well. And great. Okay, so I want to read the chat for a couple of minutes just before I tune out because I haven't actually done that, but I've done the reverse roll calls. I've done all the TA. I've done all the education. I've done more than enough education on this channel now to last. I think until something like I've got an extra 50 hours of educational material on channel. I don't think there's any point in me doing any more education on the live shows. Unless it's specifically asked for and paid for. My time is valuable, and to be perfectly frank, I've already spent the time on it. Most of the questions that most people have to ask me about, I've already spent the time doing it in the past, right? So let's just fish those bits out and try and help. And if it's not possible, because it turns out that I'm actually just suffering from hubris right now, and actually I'm too esoteric and I talk too over myself too much, and they can't be edited, and it's just impossible, and there's no way to turn my messy, horrible rank content is something that has any actual value to be made into a new standalone video. If that actually turns out to be the case, whereas I'm ready to accept that it is, I'm ready and I'm willing, and it won't hurt my feelings. I'm not going to cry about it if that turns out to be the case. I specifically remember saying the exact sentence 4 months ago or 5 months ago. Shout out to Apple Blossom. Do you remember me saying that to you then? Do you remember me saying it again now? Not going to cry about it if it turns out it's not possible. But it's been 4 or 5 months since the last time I said the exact sentence. And that's not a resentment thing. It's that what I need to do is go on, turn on my camera, on the camera, open up my old video, go to my old video, watch it, cut out a slice of the video, make it a new video. While that's happening, people can tune in and can ask me and pay me to take a look at tickers. And I'll do that for them. And then I'll go back to my old video and I'll watch through it again. And I'll do that. And if I spend the next year just watching my old videos, turning them into standalone videos, and have people interrupt me to take a look at charts, I'll help you about 1,000 times more than I'm helping you at the minute. And I'll help myself about 1,000 times more than I help myself at the minute. There'll be a wee period in between where everyone's like, that's not right. What are you going to do? You know, like those people don't understand things. Right. Brilliant. Cool. Apple Blossom, what are you chatting in there? Oh my gosh, Rocky, you're the best. Yeah, I am the best. Yeah, thanks so much. Yes, you remember. Thanks so much. Yeah, you remember that. Yeah. Homer's Ghost. Yeah, thank God you're not on chapters, says Apple Blossom earlier on. I'm sorry to the person who's doing chapters. Really appreciate it. Good luck with it, you know. Whatever you can manage, appreciate it. I'm sure everybody out here will appreciate it. Doesn't really matter too much. It's for the benefit of everybody else. And this video was really to benefit people who needed this, and they were here for it, and it helped them. I actually don't really care. I did this video to give a help to the one person that I talked to about it. They know who they are. They talked to me in Discord this morning. No need to point out names or anything, mate. You're welcome. And the chapters, everything else doesn't really matter. If you help the one person in front of you, you're doing more than enough. Okay, Ashley, thanks for tuning in. Minner, all that good stuff. Wait, what's the chat? Those sharecroppers. Yeah, that's funny. That's another good one. It's too costly for me to miss a show, says Cachito. Well, that's good that you think that way, man, because it is. I feed what I like and I save what I hate. Oh, or starve what you hate. Yeah, well, Ashley, you feed me. Thank you so much. But get banged up and enjoy your weekend, peoples. Yeah, got that coming up with Jamie later on. So that's good. 11K next goal, 12K totally. Totally. But if we don't ever get there, it doesn't matter. Rocket face. Thanks so much for that chat. It's true for most normal human beings. Ha, Minner. Remove your emotions from the trades. Yep, got to do that. I'm kind of tired of Rocky having to do all the work for free. If they want free, then they can watch Daily, says Apple. Good point. Well said. Thanks for letting me say my piece, y'all. Oh, what did Brady's Pearl say a piece earlier on? I don't even have to specifically which rallies. It's how much you know. Oh, what are you talking about? Let's see, there's some dirt in here. Well, those chants were born out of vitriolic rallies, and the toxicity was mimicked by children. Oh, what's this? What's this? Minnesota. Wait, this is a while. Brady, what are you chatting about here? Getting the school email that the third graders are scream chanting, "Build that wall." The brown kid on the school bus is insufferable. Oh my god, that's so bad. That's so bad, Brady, man. Inspired by somebody and reinforced by incalculable amounts of cowardice. Good point. Squats. Oh shit, Space Monkey. Legend. Almost forgot. Two things. Squats coming up in a second, and the other thing is that there's people out there who do fantastic work, who are fantastic people, and they're amazing, and they go on to become president of America and all sorts of stuff like that. Happens all the time. Amazing stuff. And then there's other people out there who take radical messages and send them out, and they try and spread them out. They say, and then we do revolve back around. We say this is due to one man, and I do think there is a good degree of that, and that in my own Discord, for example, I try to be very controlled in terms of the top down cultures that that I lead by example and stuff. And I think that some people in the world haven't led by example, and I think that's fair enough to point that out as well. I think that's fair enough. But we're not in control of the thing. All there is democracy, and that while I'm in control of the culture within the Discord, etc., this community, there will come a point when that starts to be controlled by the people on the lower levels too, and that red and blue doesn't matter. It never has mattered. They're distractions from what really matter, and that actually, we decide the culture, we decide the truth, we decide what's right and wrong, and that we do it together, and that no matter what one person or two people or 10 or 50 other people's opinions are, there's nobody that can stop the rising tide of the goodwill between all of us. Okay, let's do some squats. Oh, and then I'm tuning out, and it's been on for way too long. Gonna do some drinking stream later with Jamie as well, so it's like all day in front of the camera for me. Bit mental. One, and we hold them. Two. Oh, I clicked on the thing. Thanks for this, by the way. Thanks for reminding me. 3, 4, 5. This is the last one. So since it's the last one. We will make it a good one. Hold it, squeeze, and back up. And hopefully, that'll be the last of my exceedingly educational videos on YouTube. Until such times as we've got something like 50 hours of educational content put back out again in terms of clips. Maybe just 5 hours, maybe 1 hour. Who knows? You know me, though. I often revert to form. I care. It's going to be hard to do things any way differently. But that's it. That's the last of the extremely educational videos. And thank you to everybody. And I hope you enjoyed being able to understand 90%. And that 10% of it maybe got left to the side. Nice experience, hopefully. Next week, talking to the experts, making clips. Everybody else, more than welcome to come along for the ride. See you then.